on this, they show that the lowest 40% of households in the U.S. have negative real excess cash balances. So just some evidence there that the concerns about tons of stimulus really beefing up these consumer balance sheets may not necessarily have the sticking power that we have been talking about it having. What is your take on the importance of cumulative savings and where those stand right now?
Well, during the pandemic, yes, you had those big injections of stimulus. For the lowest income families, they probably spent it all, and that's why they have negative savings right now, and they're using credit cards to get by. So that's what you're seeing there, and that kind of makes sense. The thing is that it's really tough for the Fed to get at spending on services and people not spending out of this excess savings because it's not something that you finance, right? So even if you put something on a credit card, your credit card rate doesn't shift around with the Fed funds rate. So we think in aggregate, the excess savings that people have is pretty much going to run out by the fall. And again, that's aggregate, so that's including people who are across the income distribution. So I think, you know, what's really still supporting savings is people who are probably in the middle of the income distribution, who did also receive stimulus checks, but are also working and seeing their incomes rise. So really the Fed needs to see weakening in the labor market, companies taking down those job ads so that consumers feel, okay, well, I don't have as many options, so maybe I'll just sit tight, or maybe I'll pull back on my spending, and that'll help bring down inflation.
How does oil play into this? Because right now, if we're looking at U.S. crude prices trading around $70 a barrel, and overnight we did get that news, obviously, with the Saudis as well as Russia extending those oil supply cuts. How much of a fuel do we would need to see, no pun intended, when it comes to oil prices moving higher to then maybe exacerbate what we've seen when it comes to the inflation dynamics like we saw, say, last summer, which obviously oil prices were trading much higher when it comes to that, and what it could mean for Americans in their pocketbooks?
Sure. Right now, and certainly in Friday's PCE inflation report, we saw that actually gasoline prices are falling year on year. And when you go to the pump, they're pretty low right now, prices for gasoline. And in fact, many people are expecting lots of folks are going to get out in their cars this holiday week. So any increase, or rather any decreases in supply certainly will put upward pressure on prices. But that usually takes a few months, and certainly that would not be a positive in terms of the Fed working to bring down inflation, because certainly the Fed cannot control OPEC. So it's certainly a negative if we do see material increases in prices. But for the most part right now, gasoline prices definitely are cooling and providing some relief to consumers.
All right, Dana, in our final couple minutes with you, I want to do what every economist, I'm sure, just loves doing. Look into your crystal ball for me here for the rest of this week. What do you think is going to be the most important data point that we're going to get in terms of sussing out what the Fed's next moves are going to be? Is it going to be some of this labor market data, something else?
Absolutely, it's going to be the labor market data. We'll get ADP, and we'll also have the BLS payrolls report. We've seen that the labor market continues to be robust. I think that there are three forces going on here with respect to the labor market. You do have some companies that are letting folks go, but most companies are either hiring or just sitting tight and hoarding labor. And it's the case that those companies that are hiring plus the hoarders are outweighing the companies that are letting people go. So we're probably going to continue to see positive readings on payrolls and a low unemployment rate. But the key thing will be next week when we get the JOLTS data to see if vacancies are dialing down, which indicates that businesses are definitely feeling concerned about the future, and that workers should actually watch out and reduce their spending.
Dana, we only have about 30 seconds left. When it comes to the labor market, what jobs do you think are most vulnerable right now?
Well, certainly those jobs associated with the pandemic darling. So that's finance, technology, real estate, construction on residential, and also transportation and warehousing, simply because there's just less demand for goods.
Dana, thank you so much for joining us. It's always a pleasure to get your perspective on the economy and obviously what the Conference Board is gauging when it comes to your economic indicators. That's Dana Peterson, Chief Economist at the Conference Board. And taking a quick check here on the markets, Maddie, looking at what's happening and driving the S&P 500 higher. Actually, consumer discretionary is up about 1.5%. I know you like to keep a close eye when it comes to consumer type stocks. And I would wager here when you're taking a look at this obviously is tied to Tesla and the weighting that it does have in the S&P 500. So seeing those stocks moving higher there. And we'll have more coming up very shortly. This is Bloomberg. Let's get an update on company news with John Tucker.
Hey guys, let's start off with, Tesla. The sales surging there. Record quarterly sales, in fact. Deliveries so far this year up 58% compared with the same period in 2022. And at the current run rate, look on track to meet Tesla's guidance of about 1.8 million this year. Now, what we're not going to know until around July 19th, however, is whether the incentives Tesla offered to entice buyers, including the price cuts, inflicted more damage on the profits there. Apparently, there is a pretty big thirst for EVs because you also have Rivian Automotive producing 13,992 vehicles and delivering 12,640 to customers in the last quarter. The company also reaffirming its previous guidance that it's on track to make 50,000 electric vehicles this year. Gobs of news out of Cupertino. Apple surpassing the $3 trillion market cap. First company in history to do so. Now, for a little perspective, Apple's market cap is now larger than that of the entire FTSE 100. Meantime, according to the FT, Apple's slashing production targets for its Vision Pro. Apple now preparing to make fewer than 400,000 units next year. The design apparently so complex, the companies that manufacture it are kind of struggling. A major hurdle, the creation of high-resolution inward displays while projecting the wearer's eyes to the outside world. Apple working on a slew of changes for its popular AirPods earbuds as well. And that is the latest company news. You are now up to date.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a holiday shortened trading session. We've got the S&P little change, lower now by 2 points at 44.47. The Dow down 52 right now. That is a drop of 0.1%. NASDAQ, the composite index, up 21, a gain there of 0.2%. And the NASDAQ 100 index continues to advance after the tech-heavy benchmark had its best ever first half of a year. NASDAQ 100 index up 11 points now. That is a gain of just about 0.1%. That index, by the way, as we begin the second half, up 38.8%. 10-year yield, 3.79% with the 2-year, 4.87%. Spot gold up $6 the ounce to $19.26, a gain of 0.4%. John, just talking about the EV makers, Tesla shares up now by 7.8%. Rivian, its sales as well came in better than expected. We've got Rivian up by 15.2%. Lucid rallying 7.1%. Again, recapping the Dow, the S&P, they are both lower. NASDAQ right now higher by just about 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie. I'm Madison Mills here with Jess Metton on this Monday, the official start of the second half of the year. Not a ton today unless you're an EV maker, of course, driving up markets. But one thing continuing to be a concern is commercial real estate. We've got a great voice on the space here. We've got Todd Henderson. He's co-head of global real estate for DWS, joining to discuss why he thinks there's less pressure on commercial real estate than the consensus view. Todd, thank you so much for being on with us on this basically holiday Monday. Really appreciate you coming on. You got a lot of optimism here, not a ton of doom and gloom views from you. What are you seeing in the commercial real estate space that we're missing? Oh, we might not have you, Todd.
We'll work on that.
We'll work on that. I'm excited to hear an optimistic take on this Monday morning, though,
especially
Jess.
when it comes to commercial real estate, because as you know, coming off of what we saw with the regional banking stresses back in March, sort of those jitters or red flags when people were talking about it. But I think we might have him back now.
Okay, Todd, give us your optimistic take here.
Yeah, sure. I think it's more of a balanced take. Thanks for having me. There has been a bit of a doom loop that has been, I think, pervasive here over the last couple of months. And I think it followed somewhat the banking trimmer that we have. And what's happened, I think, is the definition of commercial real estate has been narrowed to office. Or said differently, the office woes are painting the rest of the commercial real estate market with a very broad brush. There is no doubt that there are challenges within the office space, but the rest of the commercial real estate market, which includes industrial buildings, which includes retail, which includes residential, the fundamentals are very strong. In fact, if you look at overall vacancy rates, inclusive of office, we're at the lowest levels that we've ever seen. In addition to that, we're seeing deteriorating construction levels, which the forward supply is always something we watch to determine how we expect markets to perform in the face of normalized demand. So with strong fundamentals and lowering going forward supply, we think that there is a reasonable picture for real estate to perform much better than much of the doom loop that we have been experiencing in the press recently.
When it comes specifically for commercial real estate, where are the vacancy rates the highest when you're looking at regions within the United States?
Well, first of all, they're higher in the office sector, and the office sector today they're as high as they've ever been, dating back to the RTC crisis that we saw in the late 80s and early 90s. When you look across the different geographic areas, the higher vacancies are in some of the markets that we're experiencing migration outflows prior to the pandemic. But these are markets like San Francisco, these are markets like Chicago, and even some of the Manhattan markets are experiencing very high vacancies.
So then talk to me about what needs to happen to change that, and specifically how much of that calculation needs to come from employers getting their workers back to the office. At least in talking with friends this weekend, Jess, it feels so all over the place,
It
right?
is.
Like you and I are here every day. Most of our friends are not in that bucket.
That's accurate.
Right? But some of them are, and some of them are saying, oh, my bosses are starting to track my time in the office. It's really annoying. So maybe that's a good indicator for you, Todd. Tell me what you're thinking.
Yeah, there have been a pretty material change, I think, in terms of the leaders of organizations' expectations with respect to being back in the office. Most of the news that you read or that's been reported over the last couple of months is more days back in the office. JP Morgan, 5 days for their senior most people. Zuckerberg published a report recently that their engineers have performed more efficiently and better when in the office. So I think we'll continue to see more in the office. But I don't think that is going to be the trigger that causes the office market to perform better. The office market historically has been the most highly correlated of any of the other sectors to the business cycle. And the business cycle is slowing, and we started into this business cycle with reasonably high vacancies already in the office sector. So what we need is a robust economy. What we need is office using job growth. What we need is probably less supply, in particular the B and C office market, which is very much commodity space. Think about it. If you're commuting an hour and 15 minutes each way to the office, are you going to be excited about coming to an office that doesn't have the amenity base that a high quality office has? No, you're not.
It's like in the Bloomberg office. We have so many snacks here, right, Maddie?
Yeah, I love that you call it an amenity base. That's what I'm going to start calling my pantry at home.
That's what brings me here.
Yeah.
I mean, the Bloomberg facility is a perfect example. Like, it's a very nice building with snacks and drinks and meeting areas, and it almost feels like a public space, but in the private environment. So that's the kind of experience that office workers want today. And if you're not delivering it, you're not going to see very robust demand for your buildings.
To Maddie's point, what is it going to take for us to get there? What's the catalyst in order to get people back into the office with, you look back what happened during the pandemic, and now there's obviously this rise of hybrid in the workplace, which obviously people are really enjoying.
Yeah, it's interesting though, the people that are just starting out in the workforce, most of those people in our firm, and as I speak to other firms and leaders in other industries, their junior people want to be in the office. They recognize that they learn more. There's better training. There's osmosis learning that goes on. And the senior folks want everyone in the office for culture continuity. So I think that's going to bounce back. It's been a little bit stagnant recently. If you look at the occupancy figures, the Castle Card key swipes, we've been in and around 50% of the pre-COVID occupancy levels in terms of swipes. But I suspect we're going to see that through the remainder of the year increase. But again, I don't think that is the nirvana. It obviously will help, but what is really going to matter is making sure that we have a robust economy, have office using job growth growing, and that the buildings that are not providing the work environment that tenants want to see, those buildings are going to have to change, or those buildings are going to have to be repurposed to something else.
All right, really quickly, Todd, in our final minute with you here, talk to me about what this looks like in terms of the impact on cities. I'm always hoping that these buildings in Midtown that are previous offices are going to get turned into apartments so that I can continue to afford to live in New York City. How likely is my dream to come true here?
I think some of the buildings, although unfortunately maybe for you a smaller percentage of these buildings are convertible. It's a challenge. You have to have significant plumbing. You have to have the floor plates lay out appropriately in order to design effective and efficient units. So I think that the conversion to residential is an option, but again, it's not the option for every building. It's the option for a much smaller percentage of buildings than those who own them and maybe those who are looking to buy cheaper apartments in the city. I think in terms of longer term, where are we seeing migration? We continue to see migration to the southeast, the south, and the southwest.
Yeah.
I think it's cheaper cost of living, lower taxes, more business-friendly environments. And those are investable themes that I believe are here to stay.
All right, Todd, thank you so much for joining us. That was Todd Henderson, co-head of global real estate for DWS on commercial real estate there. But for now, we're going to switch gears, get some world and national news with our very own Nathan Hager.
All right, Madison, thank you. Israel has launched a major offensive in what it's calling a militant operational command center in the occupied West Bank. Israeli defense forces used drones and sent about 1,000 troops into the densely populated Jenin refugee camp this morning. Palestinian health officials say at least 9 Palestinians have been killed, dozens more wounded in what appears to be the largest operation of its kind in more than a year of fighting. It follows a series of attacks on Israeli settlers this year, including a shooting last month that killed 4 Israelis. Violence appears to be easing in France after nearly a week of riots over the police killing of a 17-year-old of North African descent. Police reported 157 arrests overnight, way down from the more than 700 the night before. Bloomberg's Caroline Conan reports President Emmanuel Macron still has to face a broader issue.
You have a young population, undereducated, underemployed, and not totally integrated with the rest of the society, and that has a feeling also of resentment and discrimination.
Bloomberg's Caroline Conan in Paris. Treasury Secretary Janet Yellen is heading to China at the end of this week. Bloomberg's Ryan Teague Beckwith reports it is the Biden administration's latest effort to try to stabilize the U.S.-China relationship.
You have China's continued support of Russia in the whole Ukraine matter, which has complicated things. You have domestic pressure here as the 2024 campaign is heating up, with a lot of Republicans running on varying degrees of we need to get tough with China rhetoric, and the whole question of things like TikTok and what to do about sensitive technology.
Bloomberg's Ryan Teague Beckwith. Meantime, the U.S. is recommending American citizens reconsider their own trips to China. That's because of arbitrary law enforcement and exit bans and the risk of wrongful detention. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. Those gains for the NASDAQ 100 index, they have now fizzled. Right now we are looking at red on the screen for the Dow, the S&P, NASDAQ, and the NASDAQ 100 index. First trading day of the second half, we've got stocks edging lower. Little change, but let's begin with the NASDAQ 100 index. It is now down less than 0.1%, lower by 11 points. NASDAQ, the composite index, fluctuating between gains and losses. Back in the green, barely up by just half a point right now. The S&P, to put it all in context, lower now by just about 1 point. And we have got the Dow Jones Industrial Average lower by 31. That is a drop there of 0.1%. Tesla, certainly a stock worth watching today. We've got Tesla shares rallying today. Deliveries came in better than expected. Tesla up now by 6.6%. Similar story over at rival Rivian. Rivian Automotive now rallying 11.1%. And Lucid up now by 3.3%. Apple is reportedly slashing production targets for its Vision Pro because manufacturers are struggling with the novel gadget's complex design. Apple shares lower now by 0.8%. 10-year yield 3.80% with a 2-year that's yielding 4.88%. Spot gold up $8 the ounce to $19.27. That is a gain right now of 0.4%. And West Texas Intermediate crude up 0.1%, $70.73 a barrel. So again, recapping here, little change for NASDAQ. We've got the Dow, the S&P, and the NASDAQ 100 index all moving lower. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Madison Mills here in the Interactive Brokers studio. And you know what, Maddie, especially with what we've been covering the last year and when it comes to investment managers, it has been so tricky when you think of the amount of losses in the bear market last year, and then you're coming off of the NASDAQ 100's best first half to a year ever. And who better to talk to us about positioning than JD Gardner, CIO and founder of Aptus Capital Advisors. JD, give us your take here as far as how are you advising clients to position off the back of what we just saw the last 6 months?
Hey guys, thanks so much for having us. Really, we spend a lot of time talking about just where returns come from. So in a nutshell, yield plus growth or multiples expanding. And our advice, and it has been this for some time now, is depending on valuations to continue to expand is probably not the best way to position portfolios at the moment. So we really think there's an emphasis that should be had on yield plus growth, and that framework should drive the portfolio construction process in today's market.
So then in terms of valuations, how do you suss out whether you need to reallocate or reposition based on how expensive certain equities might become?
I think it's just equities in general. When you look at how friendly valuation expansion has been since really the financial crisis, and you can point to the Fed and QE and things like that, like a lot of people will. But I think the last 15 years or so has really kind of fooled investors into thinking that equity valuations just go up. And if you look at where we are today versus where we are historically, given the backdrop that what's happened in the interest rate environment the last 15, 16 months, what's happening, at the fundamental components of these companies, we just think multiples expanding is not in the cards, and we do think valuations look rich right now.
When you're talking about rich valuations, I'm sure Maddie and I have a few ideas of what corners of the market you could be talking about when it comes to big tech and these growth names, but is that where you think the majority of that is placed, or are there other particular corners of the market that you think look a little too lofty as well?
I think there's definitely pockets that we could point to and say, does this make sense or not? And you can probably sense where our stance would be on that. But I think in general, there are pockets where there's valuations that look somewhat attractive, but when you're just getting beta exposure to the market, we're in an environment where unless you're willing to take significant, active share risk versus the S&P, because the S&P now, like I know, just heard the market update talking about the NASDAQ, talking about the S&P. The S&P still, look at the top 5 or 6 names, you're heavily focused in names that we are dependent on the growth associated with those companies being attractive.
So then, and it's interesting because historically, when you see a strong market, that leads to strong markets ahead, right? So how do you think about risk when it comes to that? Are you concerned at all about being overbought on some of these expensive names? In your note, you mentioned that at least 80% of your fund's net assets will be invested in U.S. large caps. Are you concerned at all about going all in on a few names?
No, and here's kind of what we tell investors all the time is we think volatility should be used as an asset class or viewed as an asset class. And volatility is something that you can use to mitigate risk or enhance yield. So we have a whole suite of funds where, let's say you get beta plus additional yield, and we think that helps alleviate, that additional yield helps alleviate the potential risk that you're taking. Because, and I'll be the first one to tell you, market could end up plus 30 for the rest of the year. It could go, we could lose what gains we've had so far year to date, but we could also keep rising. I can't explain. Markets just seem to levitate right now. Soft landing. And I would guess if you polled your audience and said, hey, what do you think the market's going to do if the Fed funds rate goes from basically 0 to 5.5 or wherever it is right now in the next 14 months? I would guess most people would not say markets are going to just continue to truck higher in 2023. And so our use of volatility, our view on volatility, I think is what allows us to continue to take that equity risk and not make any major bets about some bearish sentiment. Like we still want to own stocks because we think long term they're how you compound wealth.
That's interesting because we did an MLive survey at the start of the year. I did a story with Liz McCormick over on the bonds team, and when we polled on MLive, most respondents thought that the U.S. stock market, we were talking about the S&P 500, would retest those October lows. So they didn't necessarily see at the time a bull market coming. But I'm sure, JD, especially when it comes to a lot of the sentiment indicators that we've been talking about when they're at such different extremes, I know the AAII survey recently has begun to turn higher the last 3 weeks or so. Obviously, not the same string of pessimism that we would have seen over the past 15 months before that. But do you think that there's a risk here for individual investors if they remain too bearish?
Yeah, I think there's definitely a risk. And if you look at how, like I point to the VIX, 2023 so far has been a year where there's been very little volatility, and you've seen, the VIX go from what it was to where it is today, which is significantly lower. So I think you never want to fight that. That's kind of what I was saying, I alluded to earlier. The only way, if you want to take a bearish view, your opportunity cost could be pretty damaging to long-term compounded returns. And so that's kind of where, we want to mitigate risk, specifically with our enhanced yield suite. We want to enhance the yield associated with owning beta. And we think that gives you kind of more comfort in owning equities, even if you aren't convicted that valuations are cheap.
Final 30 seconds here, JD. What is the single biggest thing that you are going to look to for the second half of the year to indicate where this market is going to end up?
I think that's a tough question on the spot.
Give me your entire thesis on the market and how we can make money by following you.
Let me shake my magic 8 ball. Hold on 2 seconds. I think the big thing is right now, what we're spending a lot of time in the office talking through is kind of what the Fed's saying versus market expectations. All of that points to kind of how we started the conversation, which is I really do think yield is going to be an incredibly important driver of returns at the portfolio level. And that doesn't mean go own some high yield bonds or something like that. I think there's different ways, specifically in the ETF space, where we're trying to pioneer ways where you can enhance yield in a very simple and liquid wrapper that's fully transparent and allows you to own beta instead of owning some factor or some tilt to portfolios that could create risk.
Thank you so much, JD. It's been a pleasure getting your insight on this, a more optimistic view when it comes to investment managers. But JD Gardner, CIO and founder of Aptus Capital Advisors, thank you so much for joining us on Zoom. And Maddie, looking at these markets, we were talking about discretionary, still up over 1% in the S&P 500, real estate also up 1%, but then you have healthcare down about 1%. So kind of keeping those gains in check for the S&P 500. We'll have more coming up. This is Bloomberg. Now let's get a check on company news with John Tucker.
All right, guys, it's electrifying. In the second quarter, don't laugh, Tesla delivered over 466,000 cars worldwide, beating Wall Street estimates. China's leading auto brand posted its best ever quarter. Rivian Automotive also exceeded expectations for quarterly production. So Tesla's vowed to push for more volume, even at the expense of profitability. Amazon could be undercut by TikTok. It's promising merchants a fast track to its burgeoning online marketplace for free, dangling free listings, shipping, zero commissions, even warehousing to all comers. This is a tactic likely to disrupt the market. So TikTok's entry into the online shopping promises to further shake up the market for cheap Chinese-made goods. Amazon also introducing a new feature to its palm-based payment system. Users can now purchase alcohol with a swipe of their hand. So does that mean underage drinkers will now have to get a fake palm or a fake hand?
We'll find out.
Why are you asking, John? Are you concerned about getting carded via palm purchase?
I have been carded. What do you...
Really? Oh, of course you have. I'm being very serious.
Good Lord. To ensure a seamless alcohol purchase, users are required to upload their government-issued ID on the Amazon website. By using the device, they can easily confirm whether a user is of legal drinking age through a prominent 21-plus message displayed on the screen. Bartenders will also perform a visual match by comparing the user's appearance with a photo uploaded by the user. I think they were just joking when they carded me. That's company news.
You're listening to Bloomberg Markets on Bloomberg Radio.
Jess Minton here in the Bloomberg Interactive Broker Studio. Quick check on the markets. The S&P 500 turning slightly negative, down less than 0.1%. The NASDAQ 100 virtually flat. Obviously, we're seeing those gains in discretionary offset some of those losses when it comes to healthcare. But let's get a check on world and national news with Nathan Hager.
Well, Jess, this didn't take long. Fresh off the Supreme Court's decision to end affirmative action in college admissions decisions, several minority groups have filed a new complaint against Harvard University. Their filing with the U.S. Department of Education accuses the Ivy League school of violating the Civil Rights Act of 1964 by giving preferential treatment to the children of alumni and wealthy donors. The groups say about 70% of legacy admissions at Harvard are white students. And because Harvard receives substantial federal funds, in their words, the school is bound by that landmark civil rights law. President Biden's looking at new avenues to ease student debt now that the Supreme Court's rejected his plan to cancel loan payments through pandemic relief. Greg Valliere at AGF Investment says the return of those loan repayments could add to the economic headwinds this year.
Young people have to repay these loans or begin paying interest. Another is a possible strike by UPS, which I think has been underestimated and could have a huge impact on the economy. Another is the budget showdown. We believe it or not, on October 1, there may be talk about a government shutdown.
Greg Valliere at AGF tells Bloomberg Daybreak that could make it even tougher for President Biden to run on Bidenomics for his reelection. A block party in South Baltimore, Maryland is the scene of the latest deadly mass shooting in the U.S. 2 young people were killed, another 28 wounded early Sunday morning. Baltimore's Mayor Brandon Scott tells CBS Mornings there may have been more than one shooter involved.
We are not going to stop until we find them and hold them accountable, but we're not just going to stop at them. We're going to try to find out who sold the gun, who trafficked that gun into Baltimore, and hold everybody on the chain responsible.
Baltimore Mayor Scott says Congress needs to do more to limit access to guns to people who shouldn't have them. We should note Michael Bloomberg, the founder and majority owner of Bloomberg Radio parent company Bloomberg LP, donates to groups that support gun control. The U.S. ambassador to Russia got to meet today with jailed Wall Street Journal reporter Evan Gershkovich. It is the second encounter for the U.S. Embassy since Gershkovich was detained in March on spying charges. Journal reports Lynn Tracy got to meet with Gershkovich today at Moscow's Lefortovo prison. It comes a little more than a week after a court extended his pretrial detention to at least August 30th. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Jess and Madison.
Thank you, Nathan. We appreciate it. Jess Minton, Madison Mills here in the Interactive Broker Studio. Maddie, you found us a very interesting story to discuss. Something that's been a hot topic. Oh, was
John
it? I'm
Tucker
sorry,
found
JT. I did not give the proper due here. It was
Okay.
JT who found the Barbie story.
JT found it for us, but regardless of who found it, this is really important news for the Barbie fans out there.
Get
because
ready.
Warner Brothers' new Barbie movie, too controversial to be released in Vietnam. The reason? The movie features a map depicting China's claim over disputed part of the South China Sea.
Oh, wow.
I can't wait to see how that appears in the Barbie movie. How do they work that into
And
the
I know
plot?
when I want to learn about geography, I turn to Barbie.
Where else would you
okay
turn?
now.
Where else would you possibly turn? Now, I should mention that the movie contains what they're calling an illegal image of China's disputed 9-dash line. So this is why it's not being released there. But, you know, another reason to be thankful that we're in the U.S. of A. as we head to July 4th. We can see the Barbie movie here.
It looks like it's coming out July 21st.
I can't wait.
Here. So we've got, about 2.5 weeks left?
I mean, are we going to see it, Jess? What's
Let's go.
our viewing plan?
should
Can
go.
we take the day off?
Yes, Charlie Pellet gave us some bar recommendations that we can do
We'll
that.
hit the Irish bar in Midtown at the Fitzpatrick Hotel, and then we'll go see Barbie. Sounds like the perfect
Sounds
day
lovely.
to me.
It'll
Are you
be
coming,
great.
John?
I'd have to be pretty drunk before you get to go see Barbie.
I thought you were going to say before you'd hang out with us, and I was deeply offended.
No, not at all.
All right, folks. Well, don't forget that you can always get your Barbie news from us. Little red on the screen here today. S&P down a little bit off of a little bit higher this morning. NASDAQ down and Dow Jones as well. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe the central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
Jess Mitten and Madison Mills. Maddie Mills. I wanted to get the full name in there. Jess. Here in the Bloomberg Interactive Broker Studio. Y'all still have 3 more hours with us while Paul Sweeney is enjoying his well-deserved vacation for the 4th of July holiday. We're going to switch gears here in the next hour, talk about the war in Ukraine with Angela Stint, Senior Fellow at the Brookings Institute. We'll also have travel tips from David Carr, Senior Insights Manager with Similar Web, who's going to join us with that. But before we get to that, we're going to have another check here on the latest with news with Charlie Pellet.
Hi, thank you very much. And here's what's going on. A lot of red on the screen right now ahead of the 4th of July holiday. We've got the Dow, the S&P, NASDAQ 100 index, all trading lower. Right now, I'm looking at the S&P. It is down by a point, little change. That seems to be the theme mid-morning here. The Dow Jones Industrial Average down 18, drop there of about 0.1%. NASDAQ down 12. That is a gain, a loss of 0.1%. NASDAQ 100 index down 0.1%. Interestingly, though, the Russell 2000 higher today. We've got small cap shares advancing by about 0.2%. 10-year with a yield of 3.82%. The 2-year 4.90%. Spot gold up $10 the ounce to $19.30. That is a gain of just about 0.6%. West Texas Intermediate crude up 0.4%, $70.95 a barrel on WTI. We're keeping an eye on Tesla shares up 6.9% right now. The electric car maker reporting record quarterly sales. Chipmaker Nvidia and the online retail giant Amazon also among other stocks supporting the tech index, while the S&P 500 index, as I mentioned, is wobbling. Right now, we've got Nvidia shares up 0.7%, Amazon higher by 0.6%. UPS has agreed to end a dual wage system for delivery drivers in its next contract with the International Brotherhood of Teamsters. And with more on that story, here's Bloomberg's Lisa Mateo.
Charlie, it dramatically lowers the chances of a nationwide strike when the current labor agreement expires at the end of July. The Teamsters say they also persuaded UPS to end a mandatory overtime policy for unscheduled workdays and provide Martin Luther King Jr. Day as a paid holiday. A UPS spokesperson says the agreement will move current part-time drivers to a Tuesday through Saturday shift to accommodate weekend delivery. The Teamsters UPS agreement is the largest private sector collective bargaining agreement in the U.S. and a linchpin in the supply chain, representing 340,000 drivers. Charlie? And that's Lisa Mateo reporting. Right now, we've got shares of UPS up by 2.2%. FedEx down 0.5%. Interesting on the year-to-date divergence on those two delivery companies. We have got UPS year-to-date up 5.4%. Look at shares of FedEx. So year-to-date, they are up by 42%. Recapping, stocks lower with the S&P down a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Mitten, Madison Mills here in the Interactive Brokers Studio. And we're bringing back Emily Griffeo, cross-asset reporter at Bloomberg News, who's going to talk to us this time. I hear you're watching crypto stocks, right? Especially if you're looking at Bitcoin right now, trading around 30,000. I know that's a key psychological level that investors have been focusing on.
Yes, the crypto space really loves round numbers. They haven't quite caught up to the technicals that perhaps the equity traders have studied for many years. But yeah, we have Bitcoin hovering around 30,000, and we're actually seeing some pretty big moves when it comes to crypto-linked equities. We have Riot Platforms and Marathon Digital. Those are both Bitcoin miners, up over 6%. And then Coinbase, one of the largest cryptocurrency exchanges, up right now 9%. That stock has been up 9 out of the last 11 trading sessions. And it's really related to industry optimism around that spot Bitcoin ETF after BlackRock filed, and then a number of other ETF issuers filed for a physically backed Bitcoin ETF. We have seen a lot of optimism in the space. Bitcoin's price, though, around 30,000, it's been pretty range bound. We had a nice spike up after that initial BlackRock filing, but now in the last few weeks, it's just been hovering in this range around 30,000, 31,000.
So how are we seeing this impact other digital currencies? Because I'm fascinated by the resiliency of Bitcoin, given everything that's happened with FTX, SBF, and Binance. I could pick a slew of names here, and you reported on this last week, just about this euphoria around Bitcoin. What do you think is contributing to the staying power there?
It's really surprising. You talk about staying power because you're right, there have been a lot of scandals last year and even into this year with just bankruptcies that Bitcoin is up 85% year to date. Now, I would say some of that is related to the liquidity sloshing around the market. If we have the NASDAQ 100 up over 30% year to date, it's not that surprising to then see Bitcoin up a little higher. But I think there is some encouraging signs there that the coin has been able to hold on to these gains. And of course, if a spot Bitcoin ETF actually is approved by the SEC, that would be a major catalyst for another leg higher. And we also saw a new 52-week high. So this is a technical stat when it comes to Bitcoin. This is according to Bespoke. Last week, it had its first 52-week high. It had gone the longest stretch since 2014 without hitting a 52-week high.
And the Wall Street Journal had that story last week, as you were alluding to, about the SEC saying the spot Bitcoin ETF filings are inadequate. When you're speaking with your sources, what are their feelings towards that? Do they still think this is something that'll still likely happen, or do they feel there's still some roadblocks here?
The industry is very split. Even within the ETF analyst in-house at Bloomberg Intelligence, there are differing opinions as to whether this is going to get approved at the end of the year or whether we still have a long way to go. This has been going on for years now, and this is just the latest iteration when it comes to now BlackRock filing, firms adding that surveillance sharing agreement with Coinbase, thinking that that will help the approval get through with the SEC. But this has been years in the making of a back and forth dialogue. So it's unclear whether this time is different.
What are the biggest macro factors that your sources tell you they're concerned about when it comes to digital currencies? Is it the overall economic picture? Is it regulation?
I think it's the broader market. Well, yes, regulation, but also the broader market falling. Because like I said, we're up 85% year to date in Bitcoin. Just like the stock rally that took people off guard, this crypto rally has taken people off guard. People were expecting that liquidity to dry up. People were expecting a bear market, and we haven't seen that. But if the rally ceases to exist in the equity market, if we do get that recession, you would likely also see these speculative technologies, Bitcoin, other cryptocurrencies, take a leg back. But like I said, it's been pretty resilient here.
Yeah.
And when it comes to these arguments, especially in recent years about the inflation hedge when it comes to Bitcoin, and obviously we did not see that correlated, right? What are you hearing from your sources on that end when people try to continue to argue that when clearly it didn't work?
It didn't work. I used to hear a lot more strategists talking about it as an inflation hedge. I have heard now more liquidity hedge. So if you expect liquidity in the market to pick up, if you expect the money supply to pick up, then you could also see Bitcoin rally, but the inflation hedge, I mean, we had the highest inflation in 40 years last year, and we saw one of the worst years on record for Bitcoin's price. So that did not work. So I have not heard any sources say that they want to add Bitcoin to their inflation-protected strategies. More tips, more real assets, but no crypto.
Yeah. All right, Emily. Well, thank you so much. We're going to have you back again.
Yes.
At the top of the next hour and until 2 p.m. So stick around, folks, for more fantastic insights from our own Emily Grafeo, our cross-assets reporter there. We're going to switch gears a little bit to the geopolitics, Jess, because that Russian war on Ukraine continues, almost hitting a year and a half now of that war continuing. Just to go through some news there, too, Ukraine's deputy defense minister reporting heavy fighting as Kyiv's troops are advancing towards Bakhmut Bakhmut. Meanwhile, Russia saying it thwarted a Ukrainian assassination attempt on the Russian-backed head of Crimea. Lots of news to talk about this morning, and all of that, of course, following that Wagner Group news from last weekend. And we've got one of the foremost experts globally, I think, on Putin joining us to talk about this. Angela Stent, senior fellow at the Brookings Institute, also author of Putin's World, Russia Against the West and With the Rest. She joins us on Zoom. Angela, great to speak with you as always. In terms of the totality of the news that we're getting out of Russia, out of Ukraine right now, and the picture it paints for you regarding Putin's power, where do you think his power stands right now? How dented is it following some of the bad news that he's gotten over the course of the last 8 days?
So Putin seems to have bounced back. I mean, Saturday, when all these events were occurring on June 24th, he was very angry. He seemed insecure. He kind of disappeared from view. But he's now done a lot of public events. As I said, he's bounced back. He's made speeches. And we do know now that the Russian state is taking over Wagner's assets. They've raided the Wagner offices in St. Petersburg. They've taken down the logo, from the building where Wagner is, and they are slowly and I think systematically trying to figure out how they're going to take these assets over, who is going to run them. And of course, it's not only what Wagner has in Russia and Ukraine, but in Africa, Central African Republic, Mali, in Sudan, in Libya, in all these places where Wagner was such an important outpost, arm of the Russian state. So for the moment, Putin looks as if he is in charge. But I think there's so many questions still surrounding what happened last week and who was behind what, that we'll still have to wait and see how this plays out.
In the wake of these insurrection attempts just over a week ago that threatened to steal Putin's grip on power, how has that impacted Ukraine's counteroffensive with Russia?
Well, it doesn't seem to have had that much of an impact. I mean, the counteroffensive continues. It's very difficult. The Russians have very strong defenses. They've been building them for months. And the Ukrainians are inching forward. They're taking small amounts of territory, as you said. They are trying to retake what's left of Bakhmut, which is really a destroyed town. But these gains come at significant loss of human life. So what the Ukrainians have said is that the real counteroffensive hasn't begun yet, in as much as they have more troops and more weapons that they can put into this. And this may happen in a few weeks. But what they've said is, we're not going to tell you when it's going to happen. And you'll find out when we're actually doing it.
Angela, if Putin was already able to bounce back just a little over a week after the Wagner Group's moves here, what is it that could finally kind of put a dent in some of his power, both in Russia and then in this war effort in Ukraine? What do you think is something that could be a catalyst for that?
Well, there could still be questions about his hold on the reins of power. There are obviously questions swirling around about how much of the regular military actually supported some of the things that Prigozhin was doing and supported his criticism of the way that the war was being waged. We know that at least one general, Surovikin, apparently supported him, and he's now disappeared. So there may be other questioning going on, and I think people will be waiting to see how the campaign in Ukraine goes. Can the Russian armed forces continue fighting back at the Ukrainians without the Wagner forces? And we don't know how many of the Wagner forces have joined the regular forces. They were supposed to have done so by July 1. We're not sure about that. So I think that's one, certainly, of the indications. The other thing would be if you could really see complaining and unrest among the elites that support Putin. But we really haven't seen that, because I think once they understood that the mutiny was over, they need Putin to stay in power to protect their assets and their way of life. They may have lost the ability to travel to Europe and visit their homes and bank accounts because all of the sanctions that we've levied on them. But still, they want to keep what they have in Russia, and continue to lead the lifestyle that they're able still to do. And for that, they don't want Putin to go. Prigozhin would not have been a good alternative for them. So I think, again, if you saw more overt unrest among the elites surrounding him, then you'd really have to question what's going on. But we haven't seen that since the mutiny was over.
Do we have a sense of what the timetable could be for how long this could continue? Or is this something that's going to turn out to be an endless war?
So Putin, I think certainly before last week, thought that Russia could outlast the West. We have elections coming up, I don't have to tell you, in the US. And we have some Republicans and candidates who are against supporting Ukraine. And then they're looking at Europe, and then also movements and groups in Europe who say that we should be forcing the Ukrainians to the negotiating table. So I think he believed that, and I think he still believes maybe he can outlast the West. But we did see a show of Western unity last week. So unfortunately, this war could go on for a long time. It also depends on how much the US and its allies, but primarily the US, is willing to furnish the Ukrainians in sophisticated weaponry. And there are things like ATACMS, missiles which the Ukrainians are really asking for, and which the U.S. has so far not given them, F-16 fighter aircraft that they want, because their air defenses are not as strong as they could be. So if they got more weaponry from the U.S., then this might be able to be over earlier. But that's also been a very slow process.
Well, Angela, how concerned are you that the upcoming elections in the U.S. are going to make that even harder for U.S. officials to properly get funding for Ukrainian counteroffenses and weaponry as well?
I think it's going to be more difficult. I think you'll see that this year, 2023, was probably the peak year of assistance for Ukraine. We'll see the debates in the fall as the election campaigns unfold. People have to figure out what they're going to do with the National Defense Authorization Act, which is where they would be assigning all the money and other things for Ukraine. But I think it's going to be more difficult because you have a split among the Republican candidates about their views on Ukraine. And obviously, if Donald Trump is the candidate, that's going to be a very different situation next year than we have this year.
Angela, we only have about a minute left here. What are your sort of final thoughts when it comes to this, and what we should be keeping an eye on moving forward?
Well, I think we have to keep an eye on the whereabouts of Mr. Prigozhin. We don't know where he is. He may be in Belarus, but we don't know that. We only have audio recordings from him. We have to keep our eyes on what happened to, if we ever find out, General Surovikin, who has disappeared. We'll see how many people disappear or are no longer there. And then I think we need to see how successful the Russian state is in taking over the Wagner assets and controlling this kind of monstrosity, really, that got out of control and that the Kremlin thought that it could control earlier on.
All right, Angela, thank you so much, as always, for joining us. It's really so important that we have you as a source to get some of these insights on what's going on the ground with that war in Ukraine and what's going on with Putin moving forward as well. That was Angela Stent, Senior Fellow at the Brookings Institute, also author of Putin's World, Russia Against the West and With the Rest. Right now, just taking a look at the markets here, still seeing a little bit of red on the screen turn into green. S&P up just a little over 0.02%, basically unchanged with the NASDAQ as well. A little bit of red when it comes to the Dow Jones Industrial Average there. Looking like not a ton of volume on this Monday as we head into the holiday tomorrow, but we'll still keep monitoring it for you here. This is Bloomberg. Let's get a check on company news with our very own John Tucker.
All right, let's start you off with each member of the Bloomberg Billionaires Index making an average of $14 million, that's per day over the past 6 months. Rich go, I'm not on this, according to data compiled by Bloomberg. Elon Musk, Mark Zuckerberg, flirting with scheduling a cage match, by the way. Tesla's chief executive officer came out on top in dollar terms. Musk, of course, the world's richest person, adding $96.6 billion to his net worth this year through June 30th, while Meta platform CEO Zuckerberg gained $58.9 billion. Speaking of Tesla, sales there are surging, so you had record quarterly sales, in fact. Deliveries so far this year are 58% compared with the same period in 2022. At this run rate, it looks on track to meet Tesla's guidance of about 1.8 million vehicles this year. As far as sneakers, the sneaker bubble may be bursting. It was during the pandemic, the few companies benefited more than Nike. Apparently, a lot of people were stuck at home and with little else to spend their trillions of dollars in stimulus money on. They couldn't get enough of the athletic gear maker. Nike's share price soared 40% in 2022, reaching a record. Those heady days are long gone. Nike shares have tumbled 37% from their peak. In 2020, Air Jordan highs were going for a 61% premium on the resale market. They're now selling in the resale market at a 2% discount. And that is your company news.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index. They are all lower right now, but the Russell 2000 is advancing, so let's begin there. That is up by about 0.2%. NASDAQ just turning positive, barely up by half a point. Been that kind of a day, swinging between gains and losses. S&P right now, little change, down 0.3%. We are looking at a holiday shortened trading session, and we've got the Dow down 18 points right now, down less than 0.1%. The NASDAQ Composite Index also lower, down now by 1 point. 10-year yield, 3.83%, with a 2-year that's yielding, look at that, 4.91% right now on the 2-year. Spot gold up $7 the ounce to $19.26. That is a gain of about 0.4%. And West Texas Intermediate crude up 0.1%, 70.74 a barrel. EV stocks pushing higher today. Tesla's deliveries coming in better than expected over the weekend. Right now, a 6.4% gain for Tesla. Rival Rivian doing even better today in terms of its stock performance, up 14.3%, and Lucid, another EV maker, up now by about 5.4%. So again, recapping, U.S. stocks are trading little changed on the S&P, swinging between gains and losses, showing an advance right now of just about half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. And Maddie, what better way to, especially when we're getting ready for the 4th of July holiday, thinking about summer travel. I was just looking at some stats over the weekend. That was, if you looked at TSA, more than 2 million passengers were on Friday. So kind of rivaling some of these numbers that we would have seen in Thanksgiving of 2019. So that was before the pandemic. When you think about that.
That's crazy.
I know, so we're getting back. I feel like we're back.
We're so back.
We are. And who better to chat with us when it comes to the travel season, especially during the summer months, than David Carr, Senior Insights Manager with SimilarWeb. David, please talk to us about what your travel outlook is, because it seems like when you think about the consumer, they're definitely out there traveling right now.
Yeah, that's true. Well, it's interesting. I mean, I look at things through the lens of web traffic as a proxy for demand, and we're actually seeing things soften up a little bit. And I think if you were in a crowded airport dealing with your canceled flight, you probably didn't feel like things were off at all. And it's not that demand has collapsed; it's just not growing in the crazy way that it was a year ago or 2 years ago, coming out of the pandemic. So we do seem to be a little bit past that revenge travel, just got to get out there.
Interesting. So softening up a bit, where exactly? I mean, is this where you're seeing just in general for flights and things like that?
Yeah, flights. I mean, I actually did an analysis of just the top 100 travel websites that we consider transactional websites, where you can buy a ticket, you can buy some sort of a booking, and it's been off a little bit. I think it's almost unchanged from last year as of June, as of preliminary stats for June. And the big standout has been cruises, though. Cruises are still crazy growing. Some more than others. I mean, Carnival itself, the Carnival brand, isn't doing quite as strongly as its some of its sub-brands. Princess is doing better. Same thing with Royal Caribbean and Celebrity. Celebrity is the one that is growing the fastest right now. Virgin is growing fastest. And I hope I'm not babbling too much, but we do definitely see a trend towards low-cost travel options winning out. So if I look at airlines, they tend to be about the same or maybe down a little bit from this time last year. But Frontier Airlines is going great. And if I look at the cruises, MSC, which is a relatively budget cruise line, they're the strongest of that set, even though, across the board, I did see that cruises were up.
What's so interesting that I always think about, our Bloomberg Intelligence airlines analysts always talk about how important business travel is for these airlines, because when it's going on the company card, maybe you're getting first class travel, whereas if it's you, maybe you're going Spirit Airlines for your own pocketbook there. Talk to me about how the data looks on your end when it comes to business travel. Are you seeing any big changes on that front this year?
Yeah, I mean, the most direct way I can track that is by looking at traffic to, say, Amex Travel, so a business travel portal, and that's that and Concur. It's up maybe 12-13% from what it was last year. So there is some interest in getting back out there to travel again.
When you're talking about a little bit of softness earlier, what do you think that tells us about the American consumer right now?
Well, I'm not an economist, but I think consumer confidence is the phrase that comes to mind. Not that people are doing horribly, but they just aren't quite sure how they're going to be doing next month, and so they're maybe a little bit less inclined to make a big travel purchase. They still want their vacation, but they might be more inclined to shop for deals.
Is that part of why we're seeing such a boom in the cruise industry? Is it viewed as a deal, or is it just that, the world's reopened, so why not go on a cruise? Like, what do we know about the thinking behind the cruise obsession?
I've read elsewhere that cruising has started to attract a younger demographic, and it still does well with old folks like me.
Younger, really?
David.
Well, it's gotten a little bit younger. And I think it is seen as a bargain, it's seen as a package. Now, the activity that I'm seeing right now, typically cruises are booked more in the March-April timeframe. They talk about wave season when everybody is buying their cruises. So, but I think, we saw strength then in demand, but the fact that we're still seeing it now means that some people are either booking a last-minute cruise, they still find that attractive, or maybe they're booking something that is for the fall or for next year. And that's all good for the cruise lines.
What about when it comes to hotel websites? What are you seeing there? Is there a difference between particular high-end types of hotels, maybe resorts versus maybe some cheaper bookings?
Well, hotels in general were doing fairly well. I did notice that some of the all-inclusive resorts were actually seeing some decline or stagnation in demand. So Sandals Beaches, Club Med, those types of places. So, again, that has some of the same fixed price appeal as a cruise does, but maybe people think of it as splurging, and so they're a little bit less likely to pull the trigger on that.
Yeah, some of those resorts, I was looking back in May to take a trip for my birthday, and like you were talking about, Club Med, I wasn't thinking about staying there, but I saw it on Expedia, and it was probably $5,000-$6,000 to stay for just a couple of days. I was like, no thanks. No, I was like, going to pass on that one.
Wait, what did you end up doing again for the travel, Jess?
I went to Aruba.
Yes.
It was great. I had a good time.
And just a hotel?
I stayed at Renaissance.
Renaissance, nice. Okay.
There before. I've been to Aruba a couple times, but
Yeah.
they have a Flamingo Island there. So it's a lot of fun, and it takes you over.
So you have to go. Interesting that you did not consider an Airbnb, it sounds like.
I wanted to go to the Flamingo Island,
Yeah.
and in order to get it, that's the private island at the Renaissance.
Of
so
course.
that's the reason that got me hooked onto it. You can buy a day pass, but it's more complicated.
Right,
to buy.
right.
Yeah.
Okay, well, that makes sense as a reason. David, I know that you don't necessarily look at this data, but you're a travel guy. You can go on this journey with us here. To what extent are you seeing declines in Airbnb interest and consumers looking more towards hotels and other, long-term stays, perhaps outside of Airbnb rentals?
I did see that was, I guess, both Airbnb and Vrbo. And despite, I see a lot of advertising from Vrbo currently, but they're trending downward year over year. So the more traditional hotel brands are actually doing a little bit better than those guys, which is interesting.
All right, David Carr, we only have about a minute left, but any sort of parting thoughts for the summer travel season for our listeners?
I thought I've mentioned that I am a cruiser. I have to live in driving distance of 3 cruise ports in South Florida.
Oh, wow.
Nice.
So part of the appeal of cruising might be that you don't necessarily have to get on an airplane to go on a cruise. And if it was over this past week, I think I would be happy to be getting on a cruise rather than flying someplace.
Yeah.
So.
Great. Well, we are so pleased that we were able to get your insight on all things travel for this summer. That's David Carr, Senior Insights Manager with SimilarWeb, joining us on Zoom. And Maddie, do you have any summer travel plans set up yet?
I'm really staying in the city because of the whole new dog element. Just reminding everyone.
Your dog, by the way,
because I haven't
cutest
brought it up
dog.
today. New dog.
I got to meet her puppy last week.
And Jess, he was lucky to meet you. He got to meet Bloomberg's Jess Minton, so it was a huge day for him.
Such a cutie. You got to bring him by the office again. But
what about you?
Oh, well, I don't have anything planned for a while.
You're
After that
gonna be
Aruba
here.
trip, I'll be here. All things Bloomberg. Now, let's get a quick update when it comes to world and national news with Nathan Hager in Washington.
Okay, Jess, thank you. Minority groups are wasting little time challenging Harvard University's admissions policies now that the Supreme Court's rolled back affirmative action. 3 groups, the Chica Project, the African Community Economic Development of New England, and the Greater Boston Latino Network, have filed a complaint today with the Department of Education. They're calling for a formal investigation into donor and legacy admissions at Harvard. They say 70% of legacies are white at the Ivy League school. They say that may violate the 1964 Civil Rights Act. Israel's anti-government protesters are back on the streets, mounting disruptions at the main airport in Tel Aviv over a renewed attempt to weaken Israel's judiciary. This comes on the same day as an unusually fierce Israeli military operation in the northern West Bank that's left at least 9 Palestinians dead. These operations depend on military reservists. Many of them are stepping up their roles. in the street protests. President Biden will be looking to bolster allied support for Ukraine following the recent mutiny attempt in Russia. He's going to meet with Sweden's prime minister at the White House on Wednesday before heading to the UK and the NATO summit in Lithuania next week. Brookings senior fellow Angela Stent says Russian President Vladimir Putin appears to have bounced back after the failed Wagner uprising.
The Russian state is taking over Wagner's assets. They've raided the Wagner offices in St. Petersburg. They've taken down the logo, from the building where Wagner is, and they are slowly and I think systematically trying to figure out how they're going to take these assets over.
Angela Stent at Brookings spoke with us moments ago on Bloomberg Markets. Wimbledon has gotten off to a soggy start. The marquee match between Novak Djokovic and Argentina's Pedro Sachin was delayed for more than an hour today. An unexpected rain shower saturated center court. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We are looking at a mixed market right now. We have got the Dow and the S&P. They're both higher. The S&P barely up by 1 point. Little change right now. Has been fluctuating between gains and losses, but again, a 1 point advance for the S&P at 44.51 as we begin the second half. We've got the Dow up 41 points now, up by about 0.1%. NASDAQ, though, on the minus side, along with the NASDAQ 100 index. NASDAQ down 10 now, a drop there of just about 0.1%. NASDAQ 100 index down 21 points, a drop there of 0.1%. 10-year yield 3.84% with the 2-year 4.91%. Spot gold up $7 the ounce, up by about 0.4%, $19.26 the ounce. And West Texas Intermediate crude up 0.8%, $71.20 for a barrel of WTI. Now, what about the market backdrop? We've got Fed minutes coming out Wednesday. We spoke with David Sowerby at Ancora Advisors earlier today on Bloomberg Surveillance.
If we find out that the Fed has more tightening to do, that companies' free cash flow is not as robust as I'm seeing right now, that could prove troublesome in the second half of the year. What I'd really like to see more than anything else is just more breadth, participation, stocks rowing the boat. The index was up 17% for the S&P 500 cap weighted, but the median company was up about 3% for the first half of the year.
And indeed, speaking of the market rally advancing, we have got the Russell 2000 up by about 0.2%. By the way, you can hear more of that conversation with David Sowerby on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. EV makers in the fast lane today. Case in point, Tesla. It reported deliveries over the weekend that were better than expected, up 5.6% right now. We heard from Rivian earlier today. That stock up 14.4%. Lucid up by 5.1%. Recapping a mixed market on this Monday now, with NASDAQ lower, the S&P and the Dow both higher. 2-point gain right now for the S&P 500 index. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie. Madison Mills here with Jess Menton on the New Markets show today, in for Paul Sweeney as he is enjoying some much-deserved time off at the shore. We've got to talk about the equity markets in a shocking twist for our coverage here at Bloomberg News, because even though it's looking a little bit across the board here unchanged, a little bit mixed reaction across markets, it is the start of the second half of the year. So we got to get a look at what we can expect to come with our next guest. We've got Dan Skelly, Managing Director and Head of Equity Model Portfolio Solutions at Morgan Stanley Wealth Management. He's going to tell us about the sectors he likes for the second half of the year. Dan, thank you so much for joining us. Talk to me about the equity market that we are looking at for the second half of the year. Seems like we might have entered a new bull market, but do you anticipate that being long-lasting, or do you think that there's another low to come still for the second half of this year?
Sure, and thanks for having me on this afternoon. I hope you and your families are all having a wonderful holiday weekend. So look, the beginning of this year has obviously been surprising to many, including Morgan Stanley, in terms of the strength of the equity rally. And I think the narrative has really been about disproving all of those folks who thought recession was lurking at the end of last year, the beginning of this year. And I think going forward, to your question, I think there's two surprises out there. I think number one is, while recession may not be lurking right around the corner, we do expect growth to continue to slow, as per the ISM data this morning, as per some slowing consumption data as well. And I think the second dynamic, and potentially an even bigger dynamic for the equity market, is I think the narrative that might get disproven in the second half of this year is that the Fed is done, right? When we think about the markets today, there's a lot of skepticism that the Fed has to go further in terms of rate hikes. And I think there's a couple of elements at play that likely augur for higher for longer rates. And I think that'll be a surprise to the downside.
So Dan, when you have these different cross currents, how do you suggest clients position?
Can you repeat the question?
Yeah, so when you have these different cross currents going on with the Federal Reserve and then slowing economic growth, how do you advise your clients to position?
Sure. So from an asset allocation standpoint, we still have an overweight to fixed income. And look, where yields are today and where they've backed up in the most recent couple of months, there's very attractive income there, and an income that we haven't seen, frankly, in a long period of time. We've also said within equity markets that with the S&P at 19 times forward earnings, with earnings that may continue to erode slowly here, that the risk reward overall for the passive equity market is not incredibly attractive. We like areas outside the US, including Japan, which has had no doubt a strong run to start this year, but we still see cheaper valuations and potentially stronger catalysts there as well. So the punchline is trying to think about more attractive risk rewards, not being passively oriented, and thinking a little bit more in terms of global diversity.
Well, talk to me about some of your other bets for the second half of the year here. I know that you are looking at healthcare as an attractive space. One of our red sectors today, of course, happens to be healthcare, not necessarily doing the best so far this year. Dan, why are you bullish about healthcare?
Sure. So healthcare, in our view, combines both defensive elements, which I think fits well given some of the dynamics we've discussed already, as well as offensive elements. When you think about all of the euphoria around AI and some of the enablers of that trend, we're very much bullish about that over a long-term period. But obviously in the near term, many of the enablers in semis and technology and software have run pretty hard so far this year. I would add, even in the face of rising rates, which does seem somewhat unsustainable. But nonetheless, what I think hasn't been priced enough are the beneficiaries. And when you think about healthcare in terms of drug discovery, trial management, data management, healthcare services within hospitals and patient care, there's going to be tremendous benefits related to the use of artificial intelligence there. So again, healthcare has both defensive, strong balance sheet, dividend, and offensive in terms of the utilization of these new innovations.
We are going to start getting earnings really soon, especially when it comes to JP Morgan. They'll be kicking things off on July 14th. What is your outlook for second quarter earnings season?
Sure. So we think earnings could be flattish this quarter. It's not going to be a complete collapse, no doubt. I think the reality is, in terms of my earlier comments, the narrative at the end of last year was that recession was around the corner. That's been disproven because the starting point in terms of the consumer, in terms of corporations, in terms of the overall economy has been just stronger, right? When we think about fiscal spending, corporate and consumer balance sheets, we've just had a much stronger starting point. And so, yes, earnings expectations, let's not forget, were originally 250 for this year. Now they're closer to 220. So they've come in quite a bit. Margins have come in quite a bit. We think it's going to be very difficult absent an accelerated economy, which, as we talked about with ISM, is certainly not evident today. We think it's going to be very difficult for earnings to reaccelerate, but they might just continue to bottom out here and be flattish. The issue is, once again, thinking about kind of history and context, when you think about valuations, when you look at the past 30 or 40 years, anytime the market has perceived a bottom or a troughing in earnings, the multiple tends to expand. And on average, over 40 or 50 years, that has gotten to around 20 times. Well, guess what? Where are we today? We're close to 19 or 20 times. So even if you think this is the penultimate bottom in this earnings cycle, it's hard to deny that the multiple expansion to date has already priced much of that in.
All right, Dan, thank you so much for joining us and giving your thoughts on this upcoming earnings season and the second half of the year as well, of course. That was Dan Skelly, Managing Director and Head of Equity Model Portfolio Solutions at Morgan Stanley Wealth Management, on the sectors he likes in 2023, among them healthcare. Let's look at the markets, though. We're seeing S&P up just a touch, basically unched there. NASDAQ in the red just by a little bit, and the Dow Jones up a bit as well. Looks like we've got Tesla continuing to drive the market up today, as well as Rivian, but other than that, not a lot of volume and a lot of lower volatility when it comes to today's trade, particularly as we head into the holiday tomorrow. We're going to keep covering markets for you, but first, we're going to get a check on company news with our very own John Tucker. This is Bloomberg. get a check on company news with Bloomberg's John Tucker.
Okay, so when you were in school and you got the results, stop laughing. This is serious business.
That was my
here.
fault. I messed that one up.
So when you were in school and you got the results of your midterms or whatever, and did you ever go to the teacher after class to complain that the grade
I did.
that the grade was too high? So this is kind of what's happening with Bank of America. They're talking to the Federal Reserve after the central bank's annual stress test projected more favorable results than the lender is forecasting. So the Fed projected Bank of America is going to post $22.3 billion in income under a set of adverse economic conditions, hypothetical, of course. Bank of America, however, projects $12.5 billion. They're trying to figure out whether or not to pay a dividend. That's why all this matters. Consumer health giant Haleon offloading non-core businesses. They're trying to identify potential suitors for their nicotine gum, patches, and lozenges. The company also exploring a divestiture of its chapstick lip balm brand, which could fetch around $600 million. Haleon owns brands such as Tums and Advil. Sounds like my daily diet. Haleon was spun off, of course, from GlaxoSmithKline last year. And loads of news out of Cupertino. Apple surpassing the $3 trillion market cap. The market cap now larger than the entire FTSE 100. Meantime, according to the FT, Apple is also slashing production targets for its Vision Pro. Right now, you are up to date on your daily dose of company news.
You're listening to Bloomberg Markets on Bloomberg Radio.
Jess Mitten and Madison Mills here in the Bloomberg Interactive Broker Studio. Let's get a quick check on the markets, Maddie. Taking a look at the S&P 500, Dow, and NASDAQ, all virtually unchanged. And then also looking at oil prices. The oil prices are just trading around $70 a barrel. But let's get a world and national news check with Nathan Hager in Washington, D.C.
Okay, Jess, thank you. Minority groups are taking aim at Harvard's admission practices days after the Supreme Court sharply cut the use of race as a factor in enrollment decisions. 3 groups filed a complaint today with the U.S. Education Department calling for a formal investigation into preferential treatment for the children of donors and alumni at Harvard. They say about 70% of legacy admissions at the Ivy League school are white. The groups are calling for a formal declaration that if Harvard doesn't stop that practice, it will lose federal funds. It's a bit calmer in France after nearly a week of riots and looting over the police killing last week of a 17-year-old of North African descent. Bloomberg's Caroline Conan reports about 157 people were arrested overnight. That is well below the more than 700 detained the night before. But Caroline says police will be out in force once again.
There's going to be again 45,000 police forces across the country trying to protect public buildings, schools, stores, and of course one big incident we saw over the weekend was the ramming and burning of a car into the home of a local mayor in a suburb of Paris.
Bloomberg's Caroline Conan reporting there from Paris. China is imposing new export restrictions on 2 metals used in chip production. That says Treasury Secretary Janet Yellen prepares to head to China at the end of this week. We get more on that from Bloomberg's Ryan Teague Beckwith in Washington.
I think that we're entering a period where stuff like lithium is going to be the petroleum. And so, yes, I don't think that there's any way that we don't start discussing things like what to do about these rare earth metals in these kinds of high-level meetings, because that is the 21st century economy right there.
Bloomberg's Ryan Teague Beckwith. China's Ministry of Commerce says gallium and germanium will be subject to export controls starting at the beginning of next month. A long-feared backup of U.S. passport applications has snarled summer plans for would-be travelers around the world. Back in March, the State Department says people who thought they were renewing or applying for new passports with plenty of time flooded a system that is still short-staffed from cuts during the pandemic. About 500 people apply for applications for passports each week. It sets up a process to issue more than 22 million passports, the level that was issued last year. But now, the State Department is dealing with continued staffing shortages to try to process the backlog. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Jess and Madison.
Thank you, Nathan. We appreciate it. Maddie, you pulled up a very interesting survey on the terminal, the latest MLife Pulse survey. And what better way to talk about AI when a lot of people are still worried, right, about whether or not it could potentially take their job at this point? What did you see in this latest survey?
Yeah, so I love this survey because it's just one of the many offerings of the Bloomberg Terminal and Bloomberg News. We do a survey of retail and professional investors weekly on a variety of topics. This week's topic was, what are you all going to be talking about over burgers and beer this week over the July 4th holiday? And artificial intelligence is the #1 topic here, even beating out concerns about finances, at least when it comes to professional investors. About 40% of professional investors anticipate AI being their #1 topic there. And particularly, I mean, this kind of makes sense for investors because of the flow of money into tech stocks and any stock that has any mention of AI. But Jess, as you know so well, the risk of recession also coming up as a potential topic this July 4th.
It definitely is, but then also we just saw first quarter GDP revised higher to 2%, so it's really kind of debunking some of these debates when it comes to an imminent recession. But the ECFC function in the terminal is one of my favorites when it looks at how we're polling economists at Bloomberg and what they're thinking, but they don't see 2 consecutive quarter-over-quarter contractions in the third and fourth quarter anymore, just mildly in the fourth quarter. But we'll have more coming up. Bloomberg Markets starts right now.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, everyone. Welcome to Bloomberg Markets. I'm Madison Mills here with the one and only Jess Menton for hour 3 of our coverage here in the Bloomberg Interactive Broker Studio. Stocks looking a little bit mixed today, but relatively unchanged. The NASDAQ 100 erasing earlier gains after we got that manufacturing data in. We're going to continue to cover markets for you throughout the day here. But first, we are going to get a check on some news and markets with Charlie Pellet.
Thank you very much. I've got you covered. Here's what's going on. Little change right now on the S&P 500 index, up by 1 point. We've got the Dow up 46. That is a gain of just about 0.2%. We've got 59 minutes to go ahead of the closing bell. Yes, early in the day, but a holiday-shortened trading session. NASDAQ, though, in the red right now, down 5 points. We have got NASDAQ 100 index trading lower by 12 points. That is a drop right now of just about 0.1%. 10-year yield at 3.48% with a 2-year 4.91%. Spot gold $19.26 the ounce, up $7 the ounce to a gain of about 0.4%. Bitcoin, by the way, 31,084 on Bitcoin, an advance today of 1.6%. While we have got West Texas Intermediate crude holding above $70 a barrel, in fact closing in on $71. WTI now at $70.97 a barrel, an advance right now of about 0.5%. Well, here it is, first trading day of the second half of the year. What to expect? Here's Christina Hooper, who is Chief Global Market Strategist at Invesco.
What the Fed needs to do, though, is keep a lid on financial conditions really easing. And so it's important that we hear that very aggressive Fed speak. It should cause some kind of pullback in markets, and that's what we need to see right now. But I think by the end of the year, it will become clear that there will be an economic recovery in the offing in 2024, and we'll see some movement upward in stocks.
And that is Christina Hooper. You can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping here, stocks are trading mixed. NASDAQ lower by just about 0.1%. We've got the S&P little changed, up a point right now. The Dow higher by 44, up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie. As always, we've got a shortened trading day here, a bit of a mixed market, but of course, that's not stopping these star tech names from coming up a lot in the news. One of them, though, Apple, our usual winner here, having a little bit of tough news today on some manufacturing news we're going to discuss with Bloomberg cross-asset rockstar reporter Emily Grafeo. Emily, thanks so much for coming back and sticking with us here. What do we need to know about the Apple story today?
So Apple, the stock not moving too much on this news, but we did get headlines that they're slashing their production targets for the Vision Pro headset. According to a report from the Financial Times, it's because manufacturers are struggling with the gadget's complex design. So they're now preparing to make fewer than 400,000 units of the headset that goes for a whopping $3,499. We have the stock down about 0.9%. It's hard to tell, though, if this price action is related to these headlines or just a little bit of a pullback after Apple
$3 trillion
topped that
valuation.
$3 trillion valuation. I knew you love that stat, Jess.
Yeah, no, especially just looking at it year to date, ticker symbol AAPL up around 48%. So a lot of these tech names, especially when you think about that sort of haven trade back in March when we saw a lot of those stresses with the regional banks, right, Emily? And then seeing, obviously, this spewed up by what's happening with big tech, but then also AI, right? I mean, how does Apple fall into that category when you're thinking about like the Microsofts of the world and the NVIDIAs and everything else?
They definitely make less AI headlines than NVIDIA, those typical semi stocks, and of course Microsoft as well. But you're talking about the safety trade, and it's been interesting to watch strategists go back to that playbook that they had during the pandemic of this is big tech. I don't want to bet against big tech. They have really strong balance sheets. They have strong cash flow. I'm going to use this as a safety play. So we saw that in 2020, and we actually saw that this year. The AI rally has powered probably the last few months of this trading in technology stocks, but even when we started the year, people were finding safety in mega cap tech.
Well, it's really interesting. We've talked about this before, Jess, the idea that there are some names out there that could benefit from not talking about AI 24/7. And I wonder if the perspective from Apple is that we are strong enough, healthy enough, and confident in our core offering of the iPhone. We don't need to necessarily bet on AI.
And then also, they didn't go on the same type of hiring spree that a lot of their counterparts did during the pandemic. So that's why you haven't seen the same type of cost-cutting efforts that they have had to go through. They've gone through some in recent months, but not to the extent that, say, Meta, right, Emily, when you think of those kind of different tranches the last 6 months or so. But then that stock as well has been on a tear up more than 100% this year.
One of the best performers. And even on this headset news, we did have Bloomberg Intelligence analysts saying that their original thesis only called for 500,000 units. So now the new reduced target, it's not really going to have a significant impact. They said for the next 3 years. So Apple is a big enough company that even a headline like this, it really doesn't affect the price action that much.
Okay, so then moving on to a little bit of a smaller news item, but still important today. Fidelity Payments. What can you tell us about that?
Right, so a smaller market cap, not $3 trillion, but this is the best performing stock in the S&P 500 today. Fidelity National Information Services up over 6.7% right now. There was news from the FT on Friday that private equity firms are considering buying a majority stake in Fidelity's WorldPay unit. So this is a payment services provider. The WorldPay unit is the merchant solutions business. They actually purchased this for about $35 billion in 2019, now trying to shed it. And now there are some private equity firms perhaps expressing an interest in buying that, and the investors really like this news. There were also analysts from Mizuho, Jefferies coming out today. They are working on July 3rd, saying that this is likely going to be good for Fidelity stock price.
And lastly, what does it mean historically when you see such a strong first half of the year in the U.S. stock market? Does that bode well for the second half?
It does. Not for people who believe in mean reversion. They might not like this statistic, but typically, when you do see a double-digit gain in the S&P 500 for the first half, you see that strength continue into the second half. So since 1987, we've seen this pattern that suggests that we'll have more strength heading into the second half. But we still have a lot of sell-side strategists sticking to their bearish forecasts and expecting that earnings recession to finally come, maybe that economic one. But so far, we just haven't seen it yet.
Any sort of final parting thoughts before we get another update from you in 1 hour?
I know we were talking about this last week, Jess, but I cannot get over the best performers year to date. Tech, I understand.
Yeah.
I think the consumer discretionary sector, cruise lines up over 100% year to date. I just think you can't see a clearer picture of the fact that we are not in a recession yet in the U.S. by Carnival Cruise Lines up over 100% in just 6 months.
It's not cheap to go on a cruise.
It's
not.
You know what I'm saying? Like, this isn't like,
we heard earlier that younger people are starting to go from one of our guests.
Which I don't know how I feel about that. Do you guys, have you ever done a cruise?
I have
Emily?
not.
So I actually had some college friends go on a cruise line.
I would rather go see a Barbie movie.
Wait, what?
They went ironically.
They went ironically?
Yeah.
But they still went on the trip.
Yeah, like almost as a joke. But they went on the trip, they paid, they had the full alcohol, food, all you can eat. They said they had a lot of fun. They got matching T-shirts.
Oh, so they were leading in. Okay,
Yes.
Good to know.
All right, well, Emily Graffeo, star cross-asset reporter, joining us. We'll be back in another hour, and I want to mention that the U.S. stock market will close at 1 p.m. Eastern, and then the bond market will close at 2 p.m. So thank you, Emily, for that market check. I want to get straight to our next guest, who I've known for quite some time, Thomas Martin, Senior Portfolio Manager at Globalt Investments. He's going to join us on Zoom to chat with us about the latest market trends and how he's advising his clients to invest. Tom, how are you doing?
Doing great. Happy July 3rd to you.
Thank you for joining us on a holiday, technically, right before the 4th of July holiday. And I know the markets are going to close pretty soon here at 1 o'clock. I want to get your take on the second half, where we're headed for the U.S. stock market after we saw what was very surprising to a lot of people after what we saw with the bear market last year.
Yeah, well, what you guys were talking about earlier, that surprisingly enough, even though you have a strong market in the first half, it doesn't mean that it has to correct in the second half and that there's a high probability, just based on what's happened in the past in the markets, that the markets could continue to be strong. Of course, what really matters is the underlying fundamentals, and those continue to be, strong. Let's just say they're strong. Certainly, there's lots of worries out there, but the market likes to climb that wall of worry. And things are, at the margin, doing a little bit better and improving.
So if companies are adjusting well to this kind of environment and improving, do you think that some of the concerns about this upcoming earnings cycle were perhaps a bit premature or overblown?
Well, I wouldn't say they were premature or overblown. I think that they were based on sound research on what the relationships have been between rising interest rates and sticky inflation and the effects of that on companies and CEOs' decisions, et cetera, and adding to that potentially tighter credit as a result of the banking crisis. All of this was very reasonable. I think what we hadn't had the experience with, and even though we knew the stimulus was very, very strong prior to this, and that also acted with a lag, it's been very surprising at that and the effect that it's had on consumers and on companies. And then also the recovery from all of the dislocations that happened with COVID and some of the changes that happened with consumer behavior, which you also referenced earlier, and with people's attitudes towards employment and employers' attitudes towards their employees. So all of these things kind of mixing together have been a bit of a slow and bumpy surprise to the positive.
Where do you think investors should be parking some of their money in the equity market for the second half?
Right. And, when we talk about investors, we're really talking about people with long-term objectives, as you and I have talked about over the years.
Right.
And, you should have your investments already geared towards sort of all kinds of outcomes. And I think that is just as important today, if not more so than it has been in the past, because the range of outcomes that we could see out there are still fairly wide. In other words, the probabilities of a recession, even though it keeps on getting pushed out, are still significant. They are not to be sneezed at or pushed away. So there are definitely risks out there. And right now, we're coming into the second quarter reporting season, and the estimates are for this quarter to be the biggest decline in earnings growth, since the pandemic. And then after that, we should see some growth again. And, the recession estimates have been pushed out. So it's very likely that these companies could do well. But all of these things that are potentially going to affect the consumers, things like benefits rolling away and people having to make payments on college loans, et cetera, really could have at the margin an impact on spending and on companies. So you really want to be diversified, be in quality companies, and look for that earnings growth where you can find it.
When you say diversify, be more specific. Where exactly? Are we talking about what people would think of as more defensive-oriented names, like staples and utilities that are lagging the broader market this year? Or do you mean more kind of safe haven plays, but are still maybe in more riskier corners of the market, like with tech and growth that maybe have strong cash balance sheets? We were just talking about Apple earlier. I know you can't really get into specific names at times, but I was curious, maybe a little bit more specific for our listeners.
Sure. And diversification is just a great issue to discuss. So when we think about it, we think about what companies have what exposure to various parts of the economy. And so we look at the economic sectors, which which do have a lot of different things that impact them. So like you said, you can have your healthcare and your utilities, which are typically considered more defensive and consumer staples. And then there's the energy companies, which are usually considered to be more value-oriented, and the industrials, which are more cyclical and so more geared to the economy. With all of the great stories that are coming out on the technology side and the companies throughout many of these sectors that are taking advantage of them, it's easy to keep on finding companies with great stories and great prospects and really interesting things that they're doing and want to kind of load up on that side. But I think it's important to also have exposure to these other companies that may do well in different parts of the economy. So, you may not want to have an overweight in utilities, but you would like to try and find the one that or two that are doing the best, that are self-help stories and that have a good earnings story behind them. So we're looking for things like that across the sectors, and then not trying to load the boat on any one of them as though it's a sector fund or one particular factor that we're looking at. We're trying to get exposure to those companies, but again, not have ones that are currently sort of floundering or showing signs of doing poorly.
Okay, so going back to that recession prediction there, and we've got about 30 seconds left on this. This is like the most anticipated recession of all time, as you know. What is the single biggest event or catalyst you're going to look to in the second half of the year to indicate to you that the recession is on its way and it's actually coming in?
Right. Well, I'm going to cheat on that and go with two things instead of a single thing.
Fair enough.
Because they're equally important. The consumer is what's been holding this up. But the reason the consumer's been able to hold it up is because of the money that they have saved, and also because employment has been so strong. So if I had to pick one thing, the original thing, it's going to be employment. So we'll be watching claims and we'll be watching the employment numbers and the unemployment numbers to see if those rise sustainably. We've had a couple of head fakes there, but when people start to lose their jobs and then they can't spend, then you really have a problem. But as I said, the companies have been strong. They've been laying people off, but not laying off too many people, right size.
All right, Tom, it's always great getting your take on all things markets. It's Thomas Martin, Senior Portfolio Manager at Globalt Investments. And taking a look, Maddie, you were bringing up volume earlier, looking at the AVAT function in the terminal. Volume down about 20% compared with the last 30 days. We'll have more coming up. This is Bloomberg. Now, let's get a check on some company news with John Tucker.
Now, let's start off with the United Parcel Service. They may avoid a threatened strike. After a marathon day of negotiations, UPS agreed to end a dual wage system for delivery drivers. So the Teamsters UPS agreement, the largest private sector collective bargaining agreement in the U.S., also, more importantly, a linchpin in the supply chain. They represent 340,000 drivers. Tesla sales, they've surged record quarterly sales. In fact, deliveries so far this year of 58% compared with the same period in 2022. Twitter imposing a temporary cap on the number of tweets that accounts can see each day. Users started reporting issues accessing the social media site earlier Saturday after they received notifications they exceeded their rate limit. The limit, 1,000 for unverified accounts. Who's got this time? And 10,000 verified users. And this finally a 4th of July tradition. The Nathan's hot dog eating contest on Coney Island. What could possibly be more American, folks?
There you go.
Nathan's is owned by Smithfield Foods. Smithfield's parent is WH Group. Yes, based in Hong Kong. Oh, by the way, 38-year-old Mickey Sudo, I think I have her name correct, of Florida, the odds-on favorite to win the big hot dog eating contest. She holds the women's world record for the most hot dogs eaten 10 minutes, 48 and a half hot dogs in 10 minutes.
It makes me
As for her technique, this is a family show. Anyway, that's your company news.
John.
I'm John Tucker.
Thanks.
More straight ahead. Don't go anywhere.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do have the Dow, the S&P, NASDAQ. They are now all in the green as we kick off the second half of the trading year. We have got the S&P up now by 3 points, a gain of just about 0.1%. The Dow up 45 now, up by 0.1%. NASDAQ higher by 4. That is a gain of less than 0.1%. Little change. NASDAQ 100 index up a point, also little change. While the Russell 2000 up now by 3 points, a gain there of 0.2%. NASDAQ 100 index did erase early gains after the tech-heavy benchmark notched its best-ever first half of the year. Stocks, though, have been wavering in subdued trading. 10-year yield right now, 3.84%, with a 2-year 4.92%. Spot gold up $6 the ounce to $19.25, up 0.3%. And West Texas Intermediate crude, $70.98 a barrel, up now by 0.5%. So again, recapping, stocks for the most part positive. We've got the NASDAQ 100 index wavering, just turned negative. It is down now by 1 point. Little change there. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Madison Mills here, still in the Bloomberg Interactive Brokers studio, continuing our third hour for Bloomberg Markets. And I'm really excited about our next guest, Maddie, because she's here in studio, not on Zoom like everybody else. We get it because of the 4th of July holiday, but we were so stoked once she came in. We had a guest actually here in studio. So it is none other than Melissa Frackman, CEO and founding partner of Emphasis Ventures. So this is a global early-stage venture capital firm that's investing in the future of fintech and commerce. Can you talk to us a little bit more about your company, Melissa, and what you do?
Sure. Emphasis Ventures, and it's a pleasure to be here. Emphasis Ventures, EMVC, is a global venture capital fund. We invest early in companies in emerging markets that are building business models that are replicable around the world, that are leading innovation in fintech and commerce. And we're very India-centric because we believe what's happening in India today is a leader for the rest of the world in terms of innovation, specifically in fintech and digital infrastructure.
So talk to me about the rubric that you have for sussing out where you want to invest, even if it's within India. What is kind of your thinking and framework behind where you guys are betting?
Sure. We believe strongly that India is where the rest of the world, and particularly U.S. tech companies and investors, should be looking.
Apple, right? When I think about some of these big names that are trying to get into that space.
Absolutely. Just last week, during Prime Minister Modi's visit to the U.S., between Apple, Google, Meta, and others, there was over $35 billion of new commitments from U.S. companies to invest in the market. But we really look at early stage technologies, business model, and product innovation that is being built in India, but it's highly replicable in markets around the world. And we invest in companies that are technology startups that are scaling both domestically, but very much in markets around the world, selling to emerging markets and also here in the U.S.
What about when it comes to more specific domestic type companies? Obviously, when I think of, say, the IPO market last year, such a drought, but now we're going through a phase where we're seeing more of that and looking more optimistic in the second half of the year. What are you seeing more within the U.S. and what that means for these early stage type companies right now?
Yes, I mean, as an early stage investor, we feel that the early stage venture market is slightly insulated from what's happening in the IPO market. And whether it continues to be sort of a slow rest of the year for U.S. IPOs or whether it picks up, these companies have enough time to continue to grow and build and even have some M&A activity or consolidation inorganically before they get to IPO stage. That being said, the Indian IPO market is picking up, and over the next few years, there will be a trend of more Indian companies listing in the U.S.
Go ahead. Can you talk about more what the specific companies are that you're investing in?
Sure. So again, we focus on fintech defined very broadly. So this is everything from fraud, identity, risk, payments, asset management, and others. For example, our portfolio company, Bureau, is building on top of India's really interesting, largest biometric ID system in the world, building a fraud and identity platform to augment credit bureaus to help digital lenders and others build a better profile of their consumer to be able to do lending for thin file underlying consumers. sort of TransUnion plus for emerging markets and internet-first companies. And that's a model that's highly replicable around the world. We're also an investor in India's largest rural insurance brokerage, which is digital insurtech called GramCover. And that's also a model that in agricultural economies around the world, there's new innovation happening in how to leverage weather data to do better risk management for agricultural commodities and for farmers. There's interesting things across the spectrum. But I think what's really most interesting for US investors to know is that there's this new digital public infrastructure model of what's happening in India around identity and payments. India is the first and largest real-time payments network. So if you imagine a Visa, MasterCard, Venmo, Zelle, all put together and free for 1 billion people, that's a model that another 50 countries around the world are replicating. And the US is launching FedNow real-time payments next month, modeled in part after India. And so we're investing in companies that are building on top of those payment systems.
That's really cool. So what does that do to me and Jess and all of our friends who are on Venmo? What does that mean for us?
It remains to be seen how the actual application will work in the US.
Yeah.
But once US FedNow rolls out, there will be real-time bank-to-bank transfers available in the US. And it's up to developers and companies and the private sector to build on top of those models to then see how it works, with legacy infrastructure and incumbent, very strong, talented companies in the US of how they'll build it. But around the world, truly at least 50, if not more countries are looking to India as an example of how to build the same thing for their citizens. And it's happening in real time. And I think it's one of the most interesting economic trends that's underreported in the US.
What is the one differentiator about India that's fueling a lot of this fintech innovation in particular?
It's the fact that policymakers, regulators, banks, and others in India have been extremely progressive in building an innovation-enabling economy. And so there's these underlying public infrastructure that's an open technology architecture that developers have been able to build on top of. It's unprecedented how technologically forward it is. In a tier 3 village, somebody could pay for a 10 rupee tea using their thumbprint with a bank-to-bank transfer instantly in a way that doesn't exist anywhere else in the world. That combined with just pure domestic consumption demand that's driving growth of Indian companies presents a very attractive opportunity for global investors.
Talk to us how you are sought after when it comes to going to these Fortune 500 companies in their boardrooms as far as trying to talk to them about these startups, early stage companies in relation to India.
Yeah, I spend a lot of time briefing US companies about the India opportunity, and it's been very exciting to see that it's no longer niche. Even 5 years ago, India's strategy was on the sidelines of a global strategy for a global company, and now, especially after the state visit last week, where there was what's called a technology handshake between all of the largest US tech CEOs, Prime Minister Modi and President Biden, it's clear that India has the clout, prominence, and is at the forefront of global investor strategies. It's impossible for them to ignore for US companies. India is currently the 5th largest global economy, and per Morgan Stanley, by 2030, it'll be the 3rd largest economy. Wow. And just by pure domestic demand, India is growing a new Chicago worth of infrastructure every single year. It's a complete miss for global companies not to have a dedicated India strategy and to be attuned to the cultural nuances of doing business there, and also to get rid of old ideas of seeing it as just a cheap labor economy. That's very old-fashioned from the 90s. At this point, it's sort of a product innovation-led growth that behooves global companies to do business there.
Is that the biggest potential headwind for growth in India, that kind of old school view and finding a way to slough off that brand of India as just a cheap labor market?
That's one of them. I think even more so is a bit of a lack of imagination among the global business community of not really seeing how far ahead, maybe it's hubris, of not seeing how far ahead the technology is in India and how applicable it is to global markets, and letting sort of incumbent infrastructures around fintech and otherwise slow down innovation. But there's a lot happening, and it's very early days for this trend, so we're very bullish.
Which bigger companies do you think are doing it right now? I mean, we already talked about Apple and some of these other big tech names, but are there any standouts that you think get overshadowed?
maybe not overshadowed, but to me, the gold standard for a global company in India is Google in terms of building a truly hyper-local strategy in India. Many villagers who don't speak English or Hindi or otherwise, would think of Google as an Indian company in terms of how hyperlocal the maps are and the products and what they've been able to do with Google Pay built on top of UPI, this real-time biometric identity system in local languages and for local context. And Bloomberg Google just invested another committed $10 billion to Indian startups again last week when the announcement was made, and we think that's a very exciting trend. There's many companies who have not localized as much, and we think there's a lot to do.
We only have about 30 seconds left. What are some of the top questions that you hear from your clients?
I often hear why any global investor should care about digital public infrastructure and what's happening with identity. And I think that the US Fed Now rollout this summer really demonstrates why real-time payments is so important and why India's UPI is a global standard now for what payments and digital payments will look like around the world and what that means for fintechs building on top of it.
All right. Thank you so much for joining us in studio with Maddie and myself. That's Melissa Frackman, CEO and founding partner at Emphasis Ventures, joining us in studio. So thank you for joining us before the holiday tomorrow for 4th of July. Doing a quick check on the markets here, though. Looking at what's leading the S&P 500, basically a little changed, but looking at consumer discretionary, still leading the way because of those gains from Tesla. But before we get to more with Bloomberg Markets, let's get world and national news check with Nathan Hager in Washington.
Okay, Jess, thank you. Legacy admissions at Harvard University are facing a new challenge now that the Supreme Court has rejected affirmative action in college admissions. 3 Black and Latino community groups in New England have filed a complaint with the Education Department saying Harvard's preferential treatment of children of donors and alumni may violate the 1964 Civil Rights Act. The groups say about 70% of Harvard's legacy students are white. President Biden's looking at a new legal pathway to provide student debt relief after the High Court rejected his initial plan to do it through Pandemic Authority. Isaac Boltanski, director of policy research at BTIG, says the president's looking to shore up his political base with this.
The young voters, 18 to 35, were the ones who stopped that red wave from coming during the midterm elections. They are a vital, absolutely vital voting bloc for the Democratic Party. And that informs our viewpoint on what the president's going to do here.
Isaac Boltanski at BTIG says the president's new plan for a 12-month on-ramp repayment period for student debt could also face legal challenges. This day before the 4th of July could be one for the books as far as the weather goes. Excessive heat warnings are in effect for much of the Southwest. Phoenix could hit 116 degrees today. That would be 2 degrees off a record. Meantime, much of the deep south is under severe thunderstorm watches into this evening. This man says he got caught up in tornadoes in Pennsylvania.
I grabbed my girlfriend and grabbed the holder to keep her from getting hit, and it came through and just left loose. Next thing I know, we're on the ground and the building's on top of us.
Now, meantime, heavy rains in Chicago over the weekend forced NASCAR to cancel the last half of the Xfinity Series race that was supposed to run through downtown. Mayor Lori Lightfoot agreed to a 3-year deal to bring NASCAR to Chicago and try to lure tourists back. It was supposed to give a nearly $114 million boost to the city's economy. Now, that may be a wash. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We got 20 minutes to go until we wrap up this holiday shortened trading day, and then it is on to the 4th of July picnics and barbecues. With the Dow, the S&P, NASDAQ 100 index, they're all higher right now, with the S&P up 4. That is a gain of about 0.1%. NASDAQ 100 index, in fact, erasing early gains after the tech-heavy benchmark notched its best ever first half of a year. Right now, we have got the Dow up 38 points. That is a gain of about 0.1%. NASDAQ higher by 14, up 0.1%. NASDAQ 100 index up 0.1% as well. Russell 2000 up now by 0.3%. 10-year checking in at 3.85%, with the 2-year 4.92%. Spot gold up $4 the ounce, $19.23, up by 0.2%. Bitcoin up 1.2%, 30,974. And crude now lower. West Texas Intermediate crude 70.26 a barrel, down by about 0.5%. Well, as for the overall market backdrop and the outlook for the Federal Reserve, Sam Linton-Broad is global head of macro strategy at BNP Paribas.
We think the market needs to price in more of an earnings recession, because without wage growth decelerating, which will only happen if the unemployment rate rises, which will only happen if companies lay off workers because they're less confident about the forward-looking outlook, then we're not too convinced that inflation is going to fall to a level that's acceptable for central banks to stop this recent hawkish rhetoric.
And that is Sam Linton-Brown of BNP Paribas. And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Tesla's deliveries came in way better than expected over the weekend. Tesla shares are rallying right now, up by about 6.1%. Other EV makers also advancing today after reporting deliveries this morning. We've got Rivian up 16.2%. And among other EV makers, Lucid, it is up now by just about 6.1%. Bank of America says it has started discussions with the Federal Reserve to understand how the company was evaluated following results of the central bank's annual stress test. Bank of America up now by 1.8%. Again, recapping, we do have stocks advancing. S&P 500 index up 4 right now, a gain of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Madison Mills here with Jess Menton on this basically almost there to a holiday Monday, as the market is going to close at 1 p.m., bond market closing at 2 p.m. But Jess, while markets are still open here, we're going to have a great talk with Marlies Van Romberg, editor-in-chief at Crunchbase. She's joining us on Zoom from San Francisco to talk all things tech and an outlook from Crunchbase for the second half of the year. Marlies, thanks so much for getting on a call with us on this half holiday here. You have a report that your organization did on the outlook for 2023 that I found so interesting. One of the results saying that companies only have 6 months of runway left in the bank. That's according to almost a third of your company respondents there. What are the other big standout data points for you when it comes to that mid-year report from Crunchbase?
Yes, good morning. Thank you for having me. So yes, we actually just published, we do a quarterly reader survey. So these are mostly, obviously, people in tech and venture capital who are taking that survey and sort of telling us what they're thinking. And some of the things that we've been tracking since the beginning of the year is, as you mentioned, runway. That's a big hot topic right now, is how much money do startups have before they start running out of cash? And what I thought was really interesting this time around was, as you mentioned, about a third of respondents who answered that question said that they actually have less than 6 months of runway, which is definitely, sort of red alarm status for your company, particularly given that venture funding is very difficult to come by. So that's really an emergency situation for those companies. What was also interesting is that it seems to be kind of a barbell. About the same percentage who answered the question said they have more than 24 months of runway. So it seems like there's almost these two classes of companies that are emerging right now. Those that are doing pretty well on managing their cash and can probably kind of survive the current environment if nothing else big kind of comes along. And then there are those that are really in a difficult situation right now. And I think that might be where we start to see more mergers and acquisitions. It's something we've sort of been anticipating in the startup world for a while and haven't quite seen that come along. But there were actually quite a few larger deals announced last week, including the big Databricks purchase of another venture-backed startup. So, we might start to see some of those trends emerge now.
What's been the catalyst for why there's been a divergence between those that are still doing well and then you have on the opposite side of that, those that are struggling to get that funding?
I think there are a lot of factors at play. In general, funding is hard to come by for all companies right now, with some obvious exceptions like AI. Investors are very, very interested in what's going on there. I think when money was easy to come by, a lot of startups did overhire, and that's why we're seeing a lot of layoffs in the sector right now as some of those corrections are being made. I think some companies were really kind of trying to grab as much market share as they could when things were hot, and as the market's slowing down now, maybe didn't manage the cash they had as well as they could have.
How much of this could be repercussions to what happened with SVB and some of these other banks that we saw earlier in the spring?
Yeah, I think we, really can't overstate the impact that the collapse of SVB had on the sector. Partly it was really a impact to the confidence in venture-backed startups. But it's also just SVB was by far the largest source of venture debt for a lot of startups. So that's something that's become even harder to come by. And for a lot of companies, as venture funding became more difficult, venture debt was sort of a plan B. So that's become more difficult as well.
Well, even though that space has been a challenge, AI is certainly alive and well here. When it comes to funding for these AI firms, what are you hearing people look at and question when sussing out which firms to invest in? I think about the difference between the guests that we have on who talk about betting on a C3 AI versus, a Qualcomm or an Intel, some of these names that are AI adjacent but a little bit more stable. What are you hearing when it comes to that decision making?
Yeah, obviously there's a lot of interest and hype kind of around generative AI, but what we're also seeing is investors are really interested in more of those kind of infrastructure companies that are going to be powering a lot of what's going on in AI and that are sort of, adjacent or tangential to the core AI companies. There's a lot of interest in that. I think one investor who spoke with us kind of, described it as looking for the nuts and bolts that are going to be powering the AI revolution. There's a lot of money going into that as well. I think as with anything startup or venture capital, we are also seeing a lot of companies that are sort of just grabbing the AI label and sort of trying to affiliate themselves with that. And I think with time, we'll sort of see a bit of a sorting there of what's real and what's not.
We only have about a minute left, but what's next that you're keeping your focus on your radar as far as what the trajectory could be when we're talking about these companies that are going through angel investment or these seed funding rounds?
I think seed funding at the beginning of this venture downturn had held up fairly well, and that's not surprising. It was really the late stage startups that were the most impacted, but we are starting to see that downturn trickle down through to the earliest stages. And that's frankly, that's worrisome because that's, the next class of companies that are going to be unicorns, 5-10 years down the road. And so I think we will see this decline really kind of extend for quite some time, with exceptions around some of these sectors that really get a lot of funding. But right now we're seeing venture funding down across all stages of funding.
All right, Marlise, thank you so much for joining us to talk about your outlook and some of the picture when it comes to funding for startups in San Francisco and more broadly in the tech space. Really appreciate it. That was Marlise Van Romberg. She is editor-in-chief of Crunchbase News. Right now, taking a look at the markets, finally back in the green just by a little bit. Across the board, S&P, Dow Jones, and NASDAQ up by just a touch. We're going to continue to give you the markets news that you need. This is Bloomberg. Let's get a check on company news with our very own John Tucker.
That's
Charlie Pellet.
Charlie Pellet in for John Tucker. And here's what's going on. We have got United Parcel Service agreeing to end a dual wage system for delivery drivers and its next contract with the International Brotherhood of Teamsters. This, according to the union, dramatically lowering the chances of a nationwide strike when the current labor agreement expires at the end of July. Today, we're looking at UPS shares. They are moving higher by just about 2.6%. FedEx, so on the minus side, FedEx shares down today by just about 0.3%. Very interesting, the divergence in the stocks we have got in the year-to-date column. UPS year-to-date up 5.7%. That compares to FedEx's gains this year. FedEx so far this year up by just about 42%. Israel plans to buy a third squadron of Lockheed Martin F-35 fighter jets from the U.S. government in a deal valued at about $3 billion. And with more on that story, here's Bloomberg's Dan Schwartzman.
Charlie, Israel's defense ministry says the purchase of the aircraft will be financed by U.S. military aid. Global interest in the F-35 has soared because of Russia's invasion of Ukraine. Last week, the U.S. approved the sale of as many as 24 of the planes to the Czech Republic, and South Korea has indicated it wants more of the jets as well. Israel was the first to receive the plane outside of the U.S. Both Lockheed Martin and engine manufacturer Pratt & Whitney, a unit of Raytheon, have committed to involving Israeli defense industries in the production of aircraft components. Charlie?
And that's Dan Schwartzman reporting. We've got shares of Lockheed Martin up by 0.6%. Apple report.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Jess Mitten here in the Bloomberg Interactive Broker Studio, getting a quick check on the market. Still, when you're looking at the S&P 500, Dow, and NASDAQ 100, virtually unchanged, seeing those gains led by discretionary in the S&P 500. Also, healthcare down about 0.7%. But before we get to more with Bloomberg Markets, let's get a check on world and national news with Nathan Hager in Washington.
Okay, Jess, thanks. Fresh off the Supreme Court's decision to end affirmative action in college admissions decisions, a number of minority groups have filed a new complaint against Harvard University's enrollment practices. They're accusing the Ivy League school of violating the Civil Rights Act through legacy admissions of donor and alumni children. In this complaint filed with the U.S. Department of Education today, the groups say about 70% of legacy admissions are white. Anti-government protesters are back on the streets, blocking traffic and disrupting the main airport in Israel. It is a new protest over the Netanyahu administration's plans to weaken the country's judiciary, and it comes on the same day of a massive military operation in the northern West Bank. Israeli Defense Forces say they launched drones and sent about 1,000 troops into a militant stronghold in Jenin. Palestinian health officials say at least 9 Palestinians were killed. A massive police presence is still expected in France after nearly a week of riots following the police killing of a 17-year-old of North African descent. Bloomberg's Caroline Conan reports arrests have declined steadily over the last several nights, but about 3,200 have been arrested in all.
The rioters are usually between 14 and 18 years old. They usually come from what we call here in France, cité, those low-income, working-class neighborhoods in the suburbs of Paris, in the suburbs of Marseille. Marseille also in the south of France was hit by a lot of rioters over the weekend.
Bloomberg's Caroline Conan in Paris. The French Interior Minister says about 45,000 officers are going to remain fanned out across the country to ensure that the relative calm holds. A U.S. city that has seen more than its share of street violence is reeling from a mass shooting over the weekend. 2 young people, one 18, another 20, were killed and another 28 wounded at a block party in South Baltimore. Mayor Brandon Scott says they think more than one shooter may have been involved. He says Congress needs to do more on gun reform.
It should not be easier for a young person to go online and order a ghost gun than it is for me to get some Claritin D from my local neighborhood pharmacy.
Baltimore's Mayor Brandon Scott spoke on CBS Morning. Since then, police say about half the victims are minors. We should note that Michael Bloomberg, the founder and majority owner of Bloomberg Radio parent company, Bloomberg LP, donates to groups that support gun control. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington, and this is Bloomberg. Jess and Madison.
Thank you, Nathan. We appreciate it. Jess Mitten and Madison Mills in the Bloomberg Interactive Broker Studio. We just have about 2 minutes before the U.S. stock market's actually going to close. You're looking at the Dow, S&P 500, as well as NASDAQ 100, basically just slightly higher, virtually unchanged, but all about 0.1% higher. But something I wanted to point out, one of our rock star reporters, Alex Simonova on our U.S. equities team, wrote this amazing story that was in the Terminal over the weekend. I know you saw it too, Maddie, talking about how Wall Street's crystal ball shatters as stocks stage a big rally. So she's basically looking at the strategy calls when you're looking at, say, Morgan Stanley's Mike Wilson, also looking at Margot Milanovic over at JP Morgan, and everything in between as far as what's happening with these calls. Basically, Lu Wang on the cross-asset team has a great function when she's looking at the tables as far as where the S&P 500, the average analyst estimate is. It's right below 4,100 actually this year, so a little bit higher than where strategists were coming into this year, about around 4,000, but still you see a lot of times with sell side obviously lagging, right? So when you think about where the S&P 500 is trading around 44.56 right now, getting close to the close there, still clearly well above that median target.
Yeah, 8.5% above that median target there. And what I love from this story, I love the quotes that Alex is able to get from her sources.
Really jumps out, right?
Yes, I'm taking this one to the bank. Brian Belsky, BMO Capital Markets, said, "Bears make you smart, but bulls make you money." And that feels like something that investors are going to want to trade on through the end of the year, Jess.
Definitely so. And we still have one more hour of our show, so we'll have more coming up. Bloomberg Markets starts right now.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
I'm Madison Mills here with the one and only Jess Netton on Bloomberg Markets today.
One more hour to go, right?
1 hour left of our 4-hour very special coverage because of who's hosting here. Jess, thanks for being here with us. Of course, looking at today's trade, we've got the markets closing early today on this half holiday here. S&P 500 closing up by just 0.1%. The NASDAQ 100 rising by just 0.2% here on the day. So not a ton of movement when it comes to the markets and the trade here, volume down as well. We're going to continue to cover this for us, but first let's get our business flash with Charlie Powell.
Hi, thank you very much, and here's what's going on. Stocks gain into the close, a move higher for stocks, the Dow, the S&P, NASDAQ 100 index, Russell 2000 as well, all move higher, and it is on to the 4th of July holiday. S&P today up 5. That is a gain of just about 0.1%. We've got the Dow up 10. Little change there, up less than 0.1%. NASDAQ higher by 28 points, up 0.2%. NASDAQ 100 index up 29, gain there of 0.2%. A lot of the bulls in this market looking for a widening. We are seeing the Russell 2000 up by 8 points, a gain there of just about 0.4%. 10-year yield 3.85%, with the 2-year 4.93%. Spot gold higher by 0.1%, $19.21 the ounce, and West Texas Intermediate crude 70.21 a barrel, lower by 0.6%. Now, stocks did shake off warnings about cooling growth and data showing a slowdown in manufacturing to edge higher. But what about that economic backdrop? Dan Skelly is head of equity model portfolio solutions at Morgan Stanley, and he was our guest right here on Bloomberg Markets.
While recession may not be lurking right around the corner, we do expect growth to continue to slow, as per the ISM data this morning, as per some slowing consumption data as well.
And you can hear more of that conversation on the Bloomberg Talks podcast. You can download it wherever you get your podcasts. Indeed, manufacturing activity did contract for an 8th month in June, the longest stretch since the financial crisis of 2008 and 2009. Right now, recapping, S&P closing 5 points higher at 44.55. That is a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie. Another big piece of markets news here for us. Tesla closing up 6.9% for the best day since March 21st. We're going to talk about the Tesla news and more with Emily Grafeo, our cross-asset reporter, here with us for the last time on our 4-hour coverage today. Emily, thanks so much for sticking around here. What's up with this Tesla news today? Why are they having such a good day?
Well, Maddie, so you're right. They're up about 6.9% to close the day. So they posted record sales in the second quarter, delivering over 466,000 cars worldwide. That beat estimates of about 448,000. And it was also up 83% from a year ago. So a pretty big rebound here for Tesla. And the sales numbers really follow a push from the company to cut prices on vehicles in order to jolt that demand. And certainly with these numbers, we are seeing that demand. They don't publish where in the world the demand is coming from, but we do know that Tesla has had a pretty big presence in China. So I suspect a lot of that growth is coming from there.
Definitely. And ticker symbol TSLA for Tesla, to check that out. Also, another name I was looking at is Rivian. So ticker symbol RIVN, up 17% for the close. It was its best day since November of 2022. So that was really because its quarterly production beat expectations. So not just Tesla, but looking at some of its rivals and counterparts also surging today, and obviously by the close, since we just had U.S. markets close at 1 p.m. Eastern. Another thing I know you're taking a close look at, though, Emily, is what's happening in the bond space. What can you tell us?
So the stock market has closed for the day. The bond market still trades for another hour, so we can still talk about that. But the two-year yield has been quietly creeping up today. We just got another basis point, so we're now at 4.9%, approaching that 5% level that we saw its highs back in March before it plunged after the mini banking failures that we saw in the regional bank sector. But this is really interesting to me because it seems like nobody's talking about how close we are to that record high, and we've been kind of pricing out those rate cuts, and the expectations for rate hikes are coming back in. I was talking to one source who said this might be a sign that the Fed is doing a good job. It's doing its job correctly. It successfully got the consensus to price out expectations of rate cuts in 2023. And now we're seeing the market get maybe more used to this higher for longer narrative. And you can see that reflected in the bond market.
Right, especially the WIRP function, right? When you take a look at that, it's usually all over the place, but right now, if you want to look at where those cuts actually land, not until next summer. So I feel like any time, especially back in March, it would have looked completely different when we had those regional banking stresses, right, Emily, as far as looking at how all of that looks. What else are you keeping an eye on?
Continuing with the bond market, I'm also looking at the yield curve because there was a headline that crossed Bloomberg earlier today that it is approaching extreme levels of inversion. We're talking about the 2s-10s curve, so the difference between the yield on the 2-year note and the 10-year bond, now at about 108 basis points. The record is 110. People are kind of split on whether an inverted yield curve is going to signal a recession. I think that's partly because we haven't seen a recession yet, and we've seen this curve inverted for so long now. But actually, my colleague, Vildana Heinrich, spoke to the professor who came up with the yield curve recession indicator a few weeks ago, and he's actually doubling down on his view that
that's cool.
We're not scrapping the yield curve. We're going to get a recession. The odds are actually rising. His name is Cam Harvey. He's over at Duke University. Maybe Paul knows him.
Oh, yeah, Paul's on the board over there.
That Duke connection
I wonder if he's
today.
still tuning in. He's emailed us earlier from the Sweeney compound and said we were, was watching on Zoom. So that was nice to
Paul,
hear from him.
if you know the Duke
Paul, take a
expert
break,
we're talking
right?
about,
Yeah.
give us a call, phone in.
Let us know, Paul.
We'll bring you in live.
But yeah, so we have one more hour till the bond market closes, 2 p.m. Eastern. And then futures actually, they start trading again at 1:15 and go until 5 o'clock this afternoon for individual stocks. So people who want to stick around and still trade, there you go.
There's still some work to be done.
Still
on
some
this
work to be done
holiday-ish
potentially.
Monday, right?
And a lot. I mean, we do have the payroll report on Friday.
Yeah.
So even though it's a softer week, people are off, there is going to be a big major economic data point, at least when it comes to the bond market reacting and Fed expectations, because the inflation data has been pretty consistent now that we're seeing inflation come down. That job market is still the thing that hasn't cracked just yet in terms of whether we're going to get a recession or
And
not.
that's usually typically a lagging indicator when you, especially with initial jobless claims. So those are the last shoe to drop. But if you look at just the expectations, a lot of people arguing maybe some of the worst of the pain has already been passed. And Gina Martin Adams has her economic regression model. Elena Papina and I actually wrote about it a couple months ago. And so they were arguing over at Bloomberg Intelligence that they thought the worst of the economic pain had passed because GDP tends to be more of a backward-looking indicator, and they look at capacity utilization, sentiment, jobless claims, all those kinds of things.
Well, yeah, one potential indicator of that is going to be these June FOMC minutes, which we're going to get at 2 o'clock. So we will no longer be on the air at that point, Jess. But
on Wednesday.
Oh, on Wednesday.
Yes,
I'm so sorry.
2 o'clock on Wednesday.
Okay, 2 o'clock on Wednesday. But Bloomberg Economics gave us a little bit of a preview that we just got out on this, saying that they're not convinced that the Fed is going to need to raise funds, but they do think that these minutes are going to talk about inflation being stickier than expected, and that could be in support of further hikes as well. So just some more eco news this week that we're going to be getting in that traders are going to be potentially coming into the office for.
For sure. Emily Graffeo joining us not once, not twice, not 3 times, but 4 times today to do market updates.
Extra credit. That's
extra
what
credit. So
me.
thank you so much for coming back in all those times and joining us. It's always a pleasure getting your insight. Emily Graffeo, who is one of our star reporters on our cross-asset team. I want to change gears and go straight to our next guest, Srini Prabhu, co-CEO and managing partner of Angel Oak Capital Advisors, who's joining us on Zoom. Thank you so much for joining us. I want to get your take and your outlook for the direction of the equity market. moving into the second half of the year after we just got off the best first half of a year ever for the NASDAQ 100.
Thank you for having me, and it's great to be on your show. I agree with you, and you've been talking about this. The first half of the equity markets has been a phenomenal ride here, and it's based on following facts. The employment seems to be doing well. The economy seems to be doing well, and as much as the Fed has raised rates, the recession doesn't seem to be in close future. Our views are that underlying news are not that easy to. There's a consumer that's weakening by the minute. There's credit card delinquencies that are rising. And you're going to see a variety of those factors play out in the second half of the year, which will temper risk-taking. We're not calling for an outright recession, but we're seeing weaknesses broader now entering in commercial real estate. And the banking system and the banking lending standards have tightened tremendously.
So what are you thinking about T-bills when it comes to the outlook, particularly in comparison with equities? What would your advice be to investors when it comes to looking at the long-term returns of T-bills?
That's a great question. And look, I go across the country talking to investors, and to a certain extent, they were certainly right for a period of time, especially last year, because you had a tremendous rise in rates, equity markets down, bond markets were losing money. And they were right for a certain period of time. And now you're seeing the reverse of that. So it is giving you a good return. It is something that the Fed has manufactured to take liquidity outside the system and put it in the money market funds. But when you think about a long-term return profile, and you're seeing that in a curve inversion that you see on from the 2s and the 10s, from a long-term perspective, it makes sense to push your maturity ladder and push it into the intermediate and to a certain extent a longer part of the yield curve, because that's where you'll get phenomenal returns. We are looking at yields now that are the historically wide levels between 7 and 8% yields, which you have not seen in a long time. And that always makes sense to put money to work.
And you're talking about and mentioning money market funds in particular, and this dynamic where you're able to yield 5%, possibly more, very different than, say, the last decade or so, coming out of the housing crisis. What's the catalyst to move investors' money from, say, money market funds more toward the equity market?
I think some of that you're seeing right now. And what the Fed has done now is engineered a scenario where we can all agree that we are not at the beginning stages of this rate hiking cycle, but we are at the ending stages of the rate hiking cycle. What we saw all of last year, which we had a very hard time talking internally and to investors, is how far high can the Fed go? Can they go to 6%? Can they go to 6.5%? Those were the questions that were being asked last year and early this year. Now the question is, we are at the end of the rate hiking cycle. We like sitting on a money market. We like yielding 5%. But I know a point in the last 15 years when interest rates were zero. And I see an opportunity now to invest in duration. I see an opportunity to invest in stocks with dividend yields. And what is the right time to put that money to work? We feel we are closer to that. We're seeing a lot of investors now actively look at taking money out of their money market. I would not say broad-based. You can see it in the money market flows, but the conversations are getting much more concrete and in terms of what people want to deploy. So there is an itch to extend duration, to invest in high-quality bonds, in mortgage bonds, and then obviously equities and dividend-paying stocks seem to be following that trend.
And to your point, looking at the Investment Company Institute, over the last 3 weeks, consecutively, we've seen outflows in money market funds, actually, and some of that probably gearing toward more of the stock market. When you have certain clients that are arguing about maybe either wanting to still have some yield there if it's 5% or more, how do you tell them when you're looking at the counterpart to, say, the S&P 500, double-digit gain so far this year, the NASDAQ 100, around a 40% gain this year, and compare that to 5%, right?
Yeah, it's a good question. And then I think that, what we tell investors is to have a fairly balanced ladder. I mean, the fact of the matter is that there is yield across the spectrum, which we did not have for a long time. It makes sense to have some in the money market if you want to be a little less or be careful of where the world is going. But they also see an opportunity of putting money to work in certain asset classes, in certain types of securities in stocks. And you're already seeing that in stocks. So I think that the fear in terms of where the Fed was going, the fear in terms of inflation, that absolute fear has changed in the recent months. The question now is there a fear of a recession on the other side of this that people are adjusting to? But I think that's what we talk to investors. I can again tell you that the discussions over the last 2 months in terms of taking money out of money market are much more concrete in terms of people looking to deploy their cash.
I guess I always think about how the market economy and the lived economy for all of us in our outside of work lives are two very different things, right? So I wonder how you can describe to me your thinking on the economic outlook when it comes to markets for the next half of the year versus your economic outlook for the just overall macro economy. What do you think the key differences will be? Are we going to see a strong close in the market for the second half of the year and potentially a struggling consumer economy for the second half of the year?
Well, I can tell you that we definitely in the camp that you will see a struggling consumer. You're already seeing a struggling consumer, and you're also seeing struggling economic factors. The PMI report today morning demonstrated some of that.
Do you still think, though, when we see some of these consumer spending numbers, is it just particular pockets?
The consumer spending can lag. I said to a lot of guys that had looked at doing vacations in 2020 and 2021, how many of those vacations are now happening that they're already booked these vacations in 2020 and 2021? And the consumer is spending. And to be fair, to your point, the job market still looks robust, but there are underlying weaknesses. The savings rate has gone down. The consumer delinquencies in terms of credit card delinquencies are now creeping higher. Auto delinquencies are creeping higher. And there's a lot of small business, small commercial real estate firms, residential real estate firms in terms of lending, residential real estate lending, that are weaker. So the trend below the surface is weakening. Now, to be fair, I've been proven wrong since the early this year. But the more Fed stays out there, whether they go higher from here more or whether they stay here, there is weaknesses. And the U.S. economy is built to a certain extent on financing. And the financing has gone from 0 to 6, 7, but close to 10% for certain segments. And that's eventually going to bleed into the credit profile of the consumer.
Well, thank you so much for joining us and getting your perspective on this, all things money market funds as well. Srini Prabhu, co-CEO and managing partner at Angel Oak Capital Advisors, joining us on Zoom. Thank you so much. We really appreciate your time. And Maddie, we still have the bond market open for up until 2 o'clock Eastern time, even though we just saw the stock market close. And looking at the advancers, of 315 in the S&P 500, it's about 60% of the index, and then around 186 companies, or about 37% declining in the broader index today. So keeping a look on there, and obviously not surprisingly, discretionary leading the way. Yeah. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ all advanced today. We had stocks shrugging off warnings about cooling growth, along with data showing a slowdown in manufacturing to hedge higher in subdued trading. S&P today up 5, spent much of the session swinging between gains and losses, but in the end it was a 5-point gain up today by just about 0.1%. The Dow higher by 10 points, a little change there. NASDAQ was up 28 points, a gain of 0.2%. The NASDAQ 100 index up 29 points today, a gain there of 0.2%. Russell 2000 advanced 0.4%. 10-year yield 3.85%. The 2-year 4.94%. Spot gold up $1 the ounce to $19.21. That was a gain of just about 0.1%. And we have West Texas Intermediate crude decline 0.8%. WTI now at $70.10 a barrel. Bank of America has started discussions with the Federal Reserve after the central bank's annual stress test projected more favorable results than the lender is forecasting. Bank of America shares did gain today, up by 1.8%. Recapping stocks higher in a holiday-shortened session. S&P up 5, a gain of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie, for sticking with us for that news. We're going to switch gears a little bit to talk about ESG. That's environmental, social governance. Really important story on the Bloomberg terminal from our folks over at Bloomberg NEF, showing that U.S. shareholder support for ESG issues has plummeted. Only one environmentally focused shareholder proposal passed in the first half of this year. Last year, that number was 13. So definitely seeing some declines there. We're going to talk about why that is with our next guest. We've got Bill Davis here, portfolio manager and founder at Stance Capital, discussing these investment strategies and the outlook for markets when it comes to ESG. Bill, thanks so much for getting on a call with us here. Talk to me about what the losing strategy looks like when it comes to getting backing for using ESG as a tool. What is that kind of looking like for you this year?
Well, if you're asking about, first of all, Madison and Jess, thanks for having me back on. If you're asking about kind of like how not to play this, I think that one of the things, and obviously this was highlighted by Larry Fink recently, you know, the whole term ESG is so confusing. Even people like me who do it for a living are starting to get confused by all the different ways in which it's basically used and misused. So I think part of what's going on is that everything that ESG managers care about, which is managing risk in a fiduciary way and avoiding, avoiding companies that score poorly on important material risk factors, none of that is really changing. And by the way, I don't even think that the interest in being better stewards of the environment, being more responsible to communities with better governance is changing among major corporations either. If anything, I would say all of that stuff is scaling up. What is happening, I think, is the realization that words matter, and that I think that both companies and investors are simply choosing different words in order to kind of, avoid stepping into the political foray here. And so I think the way to lose is to continue to talk about ESG as an amorphous thing. The way to win is to be very specific about the ways in which it's used in portfolio construction, why as a portfolio manager, in my particular case, I think I have a fiduciary duty to look at off-balance sheet risk factors, and I'm doing that. And so I think that would be my answer. I mean, I think it's just a matter of being more selective.
When you're looking at these balance sheets, where do you see the biggest risks?
I would say it varies, but certainly decarbonization is a huge one. I think that, look, we don't know what the SEC is going to come out with in the final analysis, and hopefully they come out with something soon. but there's a very decent chance they're going to require additional disclosures on the part of corporations relative to climate risk. And so I think that for a lot of investors who care about ESG, as a thesis, I think one of the things that they're very interested in is decarbonizing economies, whether it's the U.S. economy or globally. And therefore, I think that is a big risk if a company is either not reporting or not being significantly transparent or ambitious. I think that's a risk to, I think it's a risk to the board. I think it's a risk to senior management.
And to what extent do you feel that the broader kind of culture war is impacting ESG investing? When you look at a state like Florida, for example, where we're seeing a lot of this playing out between Governor Ron DeSantis and even, companies like a Disney, is that something that you feel is leading some of the headwinds when it comes to ESG investing, the political impact?
Yeah, Florida is kind of like a unique place, right? So I would say yes and no. Like, I do think it's definitely grabbing headlines, and everybody knows Disney and everybody knows DeSantis, and everybody's sort of following this thing going on down there, mostly scratching their heads. Listen, I don't think that that ESG or that the culture wars are really affecting the gradual and sort of increasing emphasis on this as a approach to investing. I think that it is much more likely that the whole culture war thing, trying to use ESG as a proxy, is going to fail because it's a confusing issue. It's not an issue for most voters. I mean, most voters, by the way, aren't participants in the stock market to begin with. So I think it's kind of a lousy wedge issue. It certainly is good for grabbing headlines, but whether it has any real impact, I don't really think it will. And I think in many ways, I think I read recently that there's no such thing as the sidelines anymore for corporations. And I think that's true, because if you're a big business that hires a lot of people and sells products to American consumers and certainly sort of the younger consumers, I don't think that you can avoid to sidestep some of these social issues because they're too important to the groups that matter to you the most. And by the way, investors is another major group that it matters to. So you've got investors, you've got employees and future employees, and you've got consumers, and they're all leaning into being more responsible around climate risk, around social justice and equity issues. And therefore, I think corporations, and especially sort of in the absence of leadership at the government level, are getting more involved in these issues, and I think rightly so. And I mean, I think, and it's not just the kind of the anti-ESG thing right now. I mean, this goes back as far as the Parkland's shooting and, Delta Airlines taking a pretty bold stand at the time, headquartered in Atlanta, that they were going to no longer offer, I think it was discounts to NRA members, and Dick's Sporting Goods jumped in and said, hey, we're not going to sell AR-15s anymore. I think corporations are doing what they believe they need to and have to do, and they're going to continue to do it, and they're not going to be cowed by the DeSantises of the world.
So as you mentioned, this is increasingly important to consumers, companies, and investors, but there's a lot of confusion around the language. What rebranding needs to happen for ESG in order to prevent some of that risk of confusion from impacting the space? Do we just need new language? Do we need to stop calling it ESG? What needs to happen?
Yeah, so interestingly, it wasn't always called ESG, right? Before ESG came along, from an investing perspective, there was a term called socially responsible investing, or SRI. Yeah. And it really started losing popularity, I would say, around 2014 or 2013. But prior to that, and going back 40 years, this was an approach to investing. Now, one of the reasons that I think the industry moved away from it, and by the way, I started my firm or I started my strategy in 2014, and I moved away from it because I think that it was for too long associated with underperformance. It was really kind of an approach to investing that was dominated by negatively screening things out, whether it's tobacco, weapons, fossil fuels, you name it. But the problem, of course, if all you do is screen things out, you're probably going to miss out on returns in the future. So there needs to be a corresponding approach to construction that is focused on actually generating strong risk-adjusted returns, somewhat independent of the names that you're willing to invest in. And I think that bit was missing. And so I think that terminology kind of went away. It got replaced by ESG, which, like, as you just said, means too many different things to too many different people. I think it's lost its usefulness.
Yeah.
I think it lost it quite a while ago. But in any case, I think something like responsible investing is a term that I find resonance with, because it implies that you're being responsible. It kind of sidesteps, there's nothing to dislike about it, I guess I would summarize it as.
All right, Bill, thank you so much. We got to leave it there, but really appreciate it. That was Bill Davis, portfolio manager and founder of firm Stans Capital. Thank you so much. We're going to get a check on world and national news now with our very own Nathan Hager in Washington.
All right, Madison, thank you. Minority groups are wasting little time challenging Harvard University's admissions policies now that the Supreme Court's thrown out affirmative action. 3 groups filed a complaint today with the Department of Education calling for a formal investigation into donor and legacy admissions at the Ivy League school. They say 70% of legacies at Harvard are white. They say that may violate the 1964 Civil Rights Act. Israel has launched its most intense airstrikes in the West Bank in nearly 2 decades. The Israeli military says it targeted militant positions in the Jenin refugee camp with drone-fired missiles and ground troops. Palestinian health officials say at least 9 Palestinians were killed. Meantime, anti-government protesters have been blocking traffic and trying to disrupt the Tel Aviv airport in a new demonstration against plans to weaken Israel's judiciary. Russian President Vladimir Putin may have bounced back from the failed Wagner Group uprising more than a week ago. But U.S. President Joe Biden is going to be looking to shore up allied support for Ukraine next week when he heads to the NATO Leaders Summit in Lithuania. Brookings Institute senior fellow Angela Stent says it's all happening amid the backdrop of Ukraine's counteroffensive.
The Russians have very strong defenses. They've been building them for months. And the Ukrainians are inching forward. They're taking small amounts of territory, as you said. They are trying to retake what's left of Bakhmut, which is really a destroyed town. But these gains come at significant loss of human life.
Angela Stent at Brookings. Wimbledon got off to a soggy start today. The opening match for tournament favorite Novak Djokovic was delayed for more than an hour. A surprise rain shower drenched center court.
I normally come out with rackets, not with towels, but it was fun. to do something different, a little bit of a strange feeling.
Novak Djokovic did win that match against Argentina's Pedro Sachin in straight sets. I'm Nathan Hager. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ all advanced today. Holiday shortened session, stocks shrugging off warnings about cooling growth and data showing a slowdown in manufacturing to edge higher in subdued trading. S&P today up 5, little changed, up by 0.1%. Did spend a lot of the session moving between gains and losses. The Dow today picked up 10 points, higher by less than 0.1%, virtually unchanged on the day. NASDAQ up 28, higher by 0.2%. NASDAQ 100 index also up 0.2%. Russell 2000 index of small cap shares up 8 points today. That was a gain of just about 0.4%. American manufacturing activity contracted for an 8th month in June, the longest stretch since the financial crisis of 08-09. That is the latest from the Institute for Supply Management. The data show factory output, factory orders, and factory employment all weakened. Now, as for the overall economic backdrop, Dana Peterson is with the Conference Board.
Businesses certainly are feeling the pinch, certainly manufacturers, because there's less demand, and also many businesses are also looking ahead and concerned that there's something negative around the corner and they are definitely pulling back, at least on investments, if not on labor.
And you can hear more of that conversation on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. Tesla and BYD set sales records in the second quarter, likely widening their lead as the world's top electric car makers. Tesla rallied 6.9% today. Rival Rivian up 17.4%. Lucid up today by 7.3%. Sources tell Bloomberg Lazard has fired a senior deal maker following allegations of inappropriate behavior during a weekend party. Lazard shares up today by 2.2%. Again, recapping, stocks higher, S&P up 5, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Madison Mills in the Interactive Brokers studio in New York. And I wanted to change gears here because now that the U.S. stock market is closed, I know everybody is really looking ahead to this 4th of July holiday. And what better guest to bring in than James King, VP of Sales and Managing Partner at RTA Outdoor Living. So this is ready to assemble outdoor kitchens.
Nice.
He's joining us on Zoom in Los Angeles. James, thank you again for joining us. Tell us about your company and more about what you do.
Absolutely. Thank you so much for having me. Essentially, what we do is RTA stands for Ready to Assemble Outdoor Kitchens. So we remove a lot of the roadblocks in purchasing and designing a custom outdoor kitchen. We have a design tool. We have a bunch of resources that really empower the customer to design an outdoor kitchen, work with our experts, and basically execute it, deliver it right to their house. And it literally assembles in the matter of hours. So it's a much faster, more streamlined solution to get an outdoor kitchen in your backyard.
Yeah, and most of your designs, I know, are delivered in as little as 2 weeks, and you get a lot of your manufacturing from what Jess beautifully said earlier, the heartland of America, Cambridge City, Indiana. We love Cambridge City in this studio. But in all seriousness, talk to me about what the manufacturing process has looked like for you. Have you had any snags when it comes to manufacturing, any delays that indicate some of the tougher economic environments that we've all been talking about here?
Yeah, honestly, it's been pretty smooth sailing. I mean, obviously, as we've scaled our business, we've definitely ran into some snags. But the good news is we source everything in the U.S. As far as the manufacturing of the island construction. And most of it's actually sourced pretty local to the manufacturing plant in Indiana.
So with the 4th of July holiday tomorrow, what does business look like? Did you see more sales as far as people wanting to get more grills, barbecue pits, things like that?
Yeah, I mean, sales have been amazing, actually. We've had, we're coming off 2 back-to-back record-breaking months. May was a huge month, and then we just closed out Q2, ended June, and actually had much more sales than we expected and forecasted. So sales have been looking great. People are, I'm sure, excited for the the holidays and obviously want to get their backyard and outdoor kitchen set up before the summer's over.
Talk to me about what the consumer demographic is looking like and anything you know about how that might have changed over time. I imagine that some of the consumers that are struggling a little bit right now are going to say, let me hold off on my outdoor kitchen until times get a little bit less tough. What's your average consumer looking like?
Yeah, honestly, things have changed, definitely. I mean, from 2020, you pretty much, everybody and their sister or brother wanted an outdoor kitchen, couldn't get it quick enough, and people were very eager and ready to move forward. Things have gotten a little bit more competitive. People are obviously holding on to money a little bit tighter, and business hasn't necessarily slowed down. We've still been growing year over year since 2020, but what we have noticed as we stepped into 2023 is we have a process where a customer puts a deposit down and isn't fully committed to the project. And then during that process, maybe they're waiting on a couple of things. We have had people come back and ask for, refunds because maybe their partner got laid off or, financial situation has changed a little bit. So we have seen a little bit more of that as we've stepped into 2023.
So what about refinancing certain potential products or things that they want to buy from you? Is that something that they're also looking to do more or less of?
In terms of the financing?
Right.
We actually don't see a lot of our customer or our demographic finance the projects. We do offer a financing option, but it seems like more and more people are steering away from it. Just in our business specifically, they're steering away from the financing option.
Interesting. So what are some of the top products that your consumers are buying when it comes to the customers and these sort of outdoor kitchen appliances?
Yeah, I mean, so our core product is essentially, it's a concrete island, comes with, the various appliances, whatever the customer chooses, but it's kind of all over the board because, again, most of what we offer is customizable. So people customize it to their space and to like the patio layout that they have. But I would say probably the most common layout we see is either a longer linear with like a grill, refrigeration, and some storage, or an L shape for those people that want to host, because the L shape you can incorporate bar seating. So people can kind of sit at that bar and obviously cook for their guests and entertain all in one shot.
So James, you are the VP of Sales and Managing Partner at RTA Outdoor Living. Talk to me about the biggest questions that you're getting from clients and the broad themes that you're hearing from them.
Question, I would say a lot of people are very interested really in like the delivery, being a product that's purchased online. Basically, they don't technically see the product until it's delivered. We do offer samples, so a lot of people are just very curious about the aesthetics. They're curious about the delivery process, and I think timeline, especially as we head into this time of year, that's pretty consistent across the board throughout the year, but people are very curious on how fast things are going to arrive to their house, because obviously once they purchase something, they're very eager to get it.
Right. Well, James, thank you so much for taking the time to speak with us about this, especially ahead of the 4th of July holiday. I know everybody's thinking about those outdoor kitchens and barbecue and grilling now. We definitely are. So thank you, James King, VP of Sales and Managing Partner at RTA Outdoor Living, joining us on Zoom from Los Angeles, Maddie.
Yeah, it's really, Jess, it's hard for people like us because we have Manhattan apartments.
I can't really grill in my studio apartment.
Can't really get an outdoor grill. But you know what we can do, Jess? We can talk about these market stocks, shaking off some of the warnings about cooling growth and data showing a slowdown in manufacturing, edging just a touch higher as we head into July 4th tomorrow at the close there.
And we have the bond market closing in about 11 minutes and looking over what's happening with the U.S. 10-year Treasury yield trading around 3.86%. So looking at what's happening there. And then also with oil prices, U.S. crude prices trading around $70 a barrel, falling about 0.8%. And then also Brent oil trading around close to $75 a barrel. But we definitely will have more coming up. We still have about 10 more minutes left with Maddie and myself. But stay tuned. This is Bloomberg. Check out our daily podcast for many of today's interviews available on Apple, Spotify, or wherever you get your podcasts.
You're listening to Bloomberg Markets on Bloomberg Radio.
Jess Minton and Madison Mills here in the Bloomberg Interactive Brokers studio in New York. And what better way to conclude the last 4 hours of programming with Maddie and myself than having Michael McKee, Bloomberg News International and Economics and Policy Correspondent, join us to give us a heads up on what's ahead in the rest of the week, even though we do have this July 4th holiday. And Mike, we do have the jobs report on Friday, but then also the JOLTS data, ADP. So it seems like there's a lot of things we still need to be focused on even when we come back from Tuesday's holiday.
Yeah, I was going to say, what could be better? Maybe all of us going to the beach, but economic data. All the economic data coming out this week. On Wednesday, we get the Fed minutes, and everybody will be looking at that to see what they said about pausing and when they might come back into the markets and raise rates. Thursday's a big day. Thursday, we get the ADP report, we get the JOLTS data, but we get the unemployment benefits data, the first time claims for unemployment, and we also get ISM services. And as you mentioned, Friday is jobs day. So enjoy it while you can, wear sunscreen, but come back to work on Wednesday.
Yeah, we got a lot to look forward to throughout the rest of the week here. One thing I'm curious about, Mike, is the importance of cumulative savings. And we got a downward revision of past personal income data. Feels like that's not necessarily getting lots of attention. When you listen in to Fed speak, talk to your sources, do you feel like they're interested in personal income data, or are they looking elsewhere to look at the importance of cumulative savings?
Well, they're definitely looking at income data and what people have available to spend. But what happens is income data encompasses a wide range of ways to get paid something. Wages and salaries, which is the main thing that people spend, went up last month by the most since January, 0.5%. Also, the savings rate went up. So people were putting money away, more money away, so they could continue to spend. And what we've seen with retail sales is basically that people are spending about what they were spending before the pandemic. So the big jump in sales that we saw post-pandemic on all that stimulus money is gone, but there doesn't seem to be a big sign yet that people are pulling back in the kind of way they would have to if we were going to go into recession.
And as you know, Mike, we just had that revision higher for the first quarter GDP. I was also looking at the Atlanta Fed's GDP now. I know it can be a little bit volatile at times, but the latest estimate has it close to 2% growth for the second quarter. What is your kind of take about when it comes to these recession debates and this argument about there's still looming slowing growth ahead when you see these revisions happening?
Well, we do think that the economy could possibly skate by without a recession, but it's going to be close. Things will slow down, but the Atlanta Fed, like all the other measures out there, are showing us that the economy is stronger and more resilient than perhaps Fed officials and others thought, which is one reason they're still talking about raising interest rates. Now, the Atlanta Fed is a sort of a snapshot in time, like a political poll. Doesn't mean that we'll get to the end of the quarter. Well, we get to the end of July, we'll get the first reading on GDP for the second quarter, but we'll get a lot of data between now and then that could push it higher or lower. But it does suggest in general things are okay. And a lot more economists on Wall Street are changing their views and thinking maybe the Fed can engineer a slowdown, but not a recession.
Mike, final 30 seconds with us. What can we anticipate heading into the Fed meeting minutes that we're going to get on Wednesday?
Well, the big question is, what do they think is going to be happening with inflation? How sticky do they think it is? And how much more do they think they need to do? They said 2 more rate moves in their dot plot, but do they really think that's necessary? Or do they think that's sort of the worst case scenario?
All right, Michael McKee, Bloomberg News International Economics and Policy Correspondent, joining us on Zoom. Always a pleasure speaking with you, Mike. So looking ahead to all things Fed Minutes, more eco data later this week. But Maddie, I got to say, it's been a blast being able to co-host with you the last
literally my career
4 hours
today.
It really is. Hopefully they invite us back.
I don't know about
it was a lot of fun, though. Looking forward to that. But then the bond market actually is closing in about 1 minute, actually 15 seconds here we have for the bond markets. But that's it for Bloomberg Markets. Stay with us. Today's top stories and global business headlines are coming up right now.
to Bloomberg New Economy Gateway Africa, building a resilient, sustainable future. I'm Jennifer Zabasaja. Over the next half hour, we'll be showing you highlights from Bloomberg New Economy Gateway Africa, this year held for the first time in Marrakesh, Morocco. The forum was centered around 4 key areas: Pan-Africanism, clean energy, financing, and the future of the continent. The conversations were dynamic and engaging around these themes as Africa navigates the impact of a slowing global economy, rising food and energy prices, the tightening of financial conditions, and the growing risk of distress in the sovereign debt market. Here's our panels and speakers at Bloomberg New Economy Gateway Africa, building a resilient, sustainable future.
The African continent contributes to global GDP only 3.1%, 55 of us. Africa's contribution to global output and global trade is about 2%. If you consider a country like Singapore, whose contribution to global trade is at around 6%, 6.1%, clearly there's a deficit. And that deficit can be attributed to a number of factors: lack of industrial capacity, lack of economies of scale, smallness of national economies, market fragmentation, 42 currencies, not trading in a single African currency. So these are some of the constraints that have held back the productive capacity and competitiveness of our continent. In the wisdom of our heads of states, they have said this is not acceptable. We must do something about it. That is why 47 countries, as we speak, have ratified the agreement establishing the AfCFTA to establish a market of 1.3 billion people and to leverage on a combined GDP of 3.4 trillion United States dollars.
The testing of the rails that you're really laying, are there any immediate lessons you've learned from what has happened so far with, this trade we've seen tea from Kenya coming to Ghana, this trade we've seen tea from Kenya coming to Ghana?
The need for digitization of customs systems, which we've done at law. So we have a legal instrument that says all 47 of us must apply the same harmonized rules for transit, trade facilitation, and customs systems, but there's no interoperability. And this lack of interoperability of customs systems continues to be a constraint. So we are now considering and working with partners, how do we introduce a digital system for customs in Africa. The other exciting lesson which we've learned is that payments is at the heart of enhancing and boosting intra-Africa trade.
I know one of the reasons you're here in Marrakesh and in Africa, because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times, those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
So Africa, in your words, has the best green hydrogen potential of any region in the world. Better than your home country, Australia? Better than Chile, for example? Better than the Gulf states like Saudi Arabia?
Yeah, I'm comfortable to say that. Yeah, I'm absolutely putting that stake in the ground. And if it doesn't get developed, it's because of lack of maybe local leadership, but lack of global support.
There is a